have three speakers today. Mr. Vivek Suman sir, who will talk on financial viability indicators, break-even point, playback IRR and NPV calculation. Dr. Divya Rajput ma'am will talk on selecting potential entrepreneurs and their entrepreneurship competencies. And MK Sateesh sir is also joined with us. He will also talk on dispute resolution for the MSME. Although Vivek Suman sir is not needing any introduction, but this is the formality from the organizer that we should introduce our speaker. So first of all, we are very thankful to you, sir, for uh, sparing your valuable time to teach the faculty member regarding entrepreneurship. You are sharing your visions as well as you have accepted our invitation. We are very grateful, sir. So Mr. Vivek Suman sir helps startups and holding companies alike to prepare and execute uh, the M&A life cycles, including raising fund and creating sustainability programs. Through the development of winning financial model and deal structure, he has taken a small business and government companies through IPO and private placement in India, in the Middle East. In addition to advising the completing the merger and acquisition as a former Big 8 GT transaction advisor, he is also enjoy leading the finance team as CFO and implementing those M&A models. He is an experienced financial sector professional with over 20 years of expertise, including board of directorship and executive leadership role. Currently, he is serving as a board of director at MIT World Peace University College of Commerce, supporting program development and preparing students for the finance careers. He is skilled in corporate strategy, investment banking, and business process re-engineering with proficiency in regulated sector, system and technology, recognized as a leader in the field, receiving multiple CFO of the Year awards, and renowned for the successful merger and acquisition. He is a collaborative and result-oriented professional dedicated to fostering the talent and driving the organizational growth. So this is not a full introduction about the Mr. Vivek Suman sir, and we would like to invite you, sir, to deliver the keynote talk. Thank you so much, sir.
Thank you so
Over
much.
to you, sir. Yes.
Thank you so much, Gauravji. Pleasure to be here all the time. Last three lectures were quite a learning experience for me too. I'm not a professor by choice. I'm a professor
Yes,
by
sir.
experience now. So
Yes,
thank you
sir.
very much for giving this opportunity.
Thank you, sir.
However, I
Hello,
have been.
Vivek.
Hi, Sateesh ji. Hi, everyone who is here, and welcome. Sateesh ji, another speaker, and welcome, Sateesh ji. So we are thankful. I'm thankful to the experience which I am able to share with a faculty member, an eminent faculty member from a different part of India. Uh, Not only faculty member, they are research scholars too, and some of them are startup entrepreneurs. So welcome you all. As you can see on today's agenda, we are trying to just tell me if my screen is visible, full screen
Yes,
or
yes, sir.
presenter.
Full screen is visible.
Okay, good. So thank you very much for today's call. We are going to discuss, of course, hardcore finance today. But as you have seen for last 3 days, I have made it in a language which anybody and everybody can understand. Still not losing the crux of the financial matter and the seriousness of the same. Yeah, we cannot avoid that. Today's discussion is specifically, and I will try to link all the lectures which has happened till today and where it falls and why it is important. And before I go there, of course, the topic which I am covering is financial matrices for informed decision making in startups or a business, overall a business. Yeah. So even though it's a large business like Tata, HCL, etc., they uses the same matrices to judge their new ventures. So what all we will cover today? Is my slide is changing, Gaurav? Please let me know. Can you see my second slide?
Sir, now you are on financial metrics for informed decision making.
Enhancing the capital budgeting effectiveness, right? That's the second slide.
Yes, sir. Yes, sir. Yes, sir.
Okay, fine. So I'm on the second slide. Thank you. Appreciate that. So what we are going to cover today is quite key for you to make judgment whether you are in right business or wrong business. Now, doesn't that sound fancy? Yeah. So even though you are in personal life, a lot of people do apply in their personal finance this aspect too. Okay. So whatever matrices we will discuss, by end of an hour, I'm 100% sure you will be, gained and empowered enough to make your own decisions going forward, be it a startup or be it your own personal finances. What all we will cover? Four major themes. First, we are going to look into the capital budgeting effectiveness, how we can enhance that. Yeah, and that's a regular decision which any company takes, because once you commit to this kind of capital, budgeting, you it is irreversible decision. Okay. So first we will learn why it is important to make such kind of decision. Second, we will go and understand how you manage this whole gamut of operation in finance. Yeah. So from planning, organizing, and monitoring, post audit, all that stuff. Quick one slide. And then we will jump into our real matter of crust, which we will be equipped with small examples that how you use these techniques, analytical techniques, to judge any project viability in the scheme of things where we are. As we are in entrepreneur development program, we have to understand why particular financial metrics, which is net present value or NPV in short, rules. Yeah, so we'll see the examples on the same. Let's go to the understanding why it is important to make a decision with all the seriousness which we are going to discuss today. Why even I, as an entrepreneur in biotechnology or entrepreneur in technology, in AI, ML, need to get my hand dirty and a boring subject of finance, which of course people like us are trying to make, and people like you who are learning is trying to make interesting. So thank you very much for your contribution to finance world. Now that lies in these three core understanding. First of all, the decision-making process cannot end without understanding of financial matrices and judgment on the same. So not only the number, you also need to understand how that number converts into your real life decision making. Project selection decision is a critical decision for any company, be it you are a first-time startup, first-time entrepreneur, you are expanding business, or you are established business. You need, it becomes a pivotal that any new endeavor which a company takes, it influences its long-term goal and sustainability, which we learned yesterday with Sushil Kumar Sarmaji. The sustainability is another metrics which need to be included along with the finance. But how, to remain sustainable, first and foremost, you need to be strong enough in your finances. So financial sustainability remains first priority for any business houses, because yeah, that business houses work with a mindset of money making. However, there are a lot different kind of businesses with a sustainable motive also exist. Yeah, but still you need certain kind of currency to exchange those sustainabilities. Otherwise, you can't be long-term sustainable. Second, this bears the implication of firm risk profile. So risk profile is how vulnerable you are from the outside environment, the externalities which we say, be it COVID, which we have seen very nearly, yeah, and it's a lifetime experience which we have taken. How you can still remain, intact, and we have seen in India, 70% companies remain intact. Hardly we lost 3 to 5% of our businesses. 30% of shock has been observed, but 3 to 5%, 5 to 10% as per statistics, we see people have gone down under, yeah, because the GDP has reduced by that much. Often these kind of decisions are irreversible. Often, if you have taken this decision with a mindset that I'm going forward, capital investment or capital budgeting, if you have not done properly, you have a substantial, you can reverse your decision. Okay, I'm stopping this business. Yeah, I'm stopping this expansion plan. I'm stopping my next course of action, but you have to take the substantial burns, making them highly challenging too. And thereby, understanding of this financial matrices, even though you are from non-finance background, becomes a key for any entrepreneur and an individual. Now, let's get our hand dirty. First of all, let me integrate this particular lecture to all the lecture which Gaurav ji and team Galgotia has organized for you with a sponsorship of IIC and government institution. You remember yesterday, one of our lecture was around idea generation, where we learned about a scramper. You remember that? That there can be in one glass, you can have two nozzles and two glass can be filled. Yeah, that's the idea generation, and it is a key for any company to think on. Even though you think your idea is brilliant, but put that idea into this spectrum of a scamper and judge that it is right or wrong. That's a part number one, where you justify your idea in terms of it's a matrix of a scamper. So that is another matrix which our professor from IIT NIT division Delhi has explained us. Second thing, you learned first day lecture from ma'am who comes from incubation center. She taught us about pre-feasibility study. So once you have this idea fructified, strengthened, understood, clearly defined, and you are sure now nobody can decline, even you have judged on this scramper matrix or business canvas you have put on. There are different models, I'm just taking few names. Then you do industry analysis and project assessment, particularly to understand whether, okay, this scheme which I am bringing or this solution which I am bringing to particular problem, how that fits in the economics, in the industry economics, where I am going to hit the economy and where I will get the benefits from. So that becomes your project assessment part. Then we have also learned till now that how to align our capital budgeting or the capital expenditure, or now the idea which we are sure and we are going ahead with, that aligns with the company goals or the individual entrepreneur's goals. You have to link that, and that linkage is also very important, which of course one of our panel member is going to speak about when he will talk about the feasibility study. And of course, that ends with monitoring and post audit, whether when you implement, when you are about to get money and going to invest that money, you need to control that by, continual improvement on in capital budgeting by the information which we will learn today. You need to learn those matrices and keep on updating to measure the effect of your idea, which you are trying to bring into existence. For example, how do we realize revenue compares to project? One of the question you need to answer, right? Yeah, compared to different projects can have a different kind of revenue stream. So which one is right for you is second question you can ask. Usually there is a discrepancy between a project manager who design a project or an entrepreneur who thinks about his project in right fashion and explain with those regions. So the regions cannot be converted into number or the matrices which are important for the businesses. Thirdly, you can also ask at that stage, is this capital budgeting process and this whole process of starting of idea to going to monitoring a particular matrix is a process of capital budgeting. So let's understand what are the 4 key steps to capital budgeting itself and judging that whether this return which I'm going to get in form of revenue or profitability is enough for me to survive this company for next 20 years or 100 years or 500 years. What are those 4 steps? First step, estimate the cash flow. As simple as that. So look into revenue, how much I can make a revenue. So when you did a pre-feasibility study, you guessed what is the total market size, right? You understood that total market for AI and ML is $1 trillion because of chat GPT has intervened. Earlier, it used to be around $600 billion without chat GPT. So in 3 months, the whole dynamics of an industry has changed. And that's why you need to conduct your pre-feasibility study all the time and every time. You cannot depend on somebody else's study and think, okay, Flipkart has done well, Amazon is doing really nice. So let me start another company called Snapdeal and I will be successful, or Paytm Mall and I will be successful. And we all know the results of those 2 companies. Yeah. So that is why your estimate of cash flow has to be very correct. Second, assess the riskiness of those cash flow. That's the step number 2 in any capital budgeting. So now you have decided Snapdeal has to come irrespective of what the market dynamics are suggesting, what the market economics are. But if you fail to judge what is the riskness associated with this cash inflow and outflow, you are again born to fail. How you can do that? Simple. You do the sensitivity, scenario analysis, and Monte Carlo simulation with putting thousands of iteration for the risk available to those cash flow. Yeah, that whether this money will come or not, judge it through all these scenarios. So if COVID happened, will public go out? No, they will not go out. So will they buy on Flipkart, Amazon, or with me? That simulation you need to do and come up with a scenario or sensitivity analysis where you can judge your project. Things doesn't end there, ladies and gentlemen. Then the major finance parts start, which you as an entrepreneur or you as a faculty of EDP program need to explain to your cohorts or your proteges who are going to become a billionaire very soon or unicorn in our sense. They need to judge this whole effective capital budgeting process in terms of cost of investment and what is that capital which they are trying to raise, at what rate they are going to get that. For example, in bank you get at 10% or 7% interest rate, so that's the cost of that capital. When you go to VC market, cost of capital ranges anywhere between 25 to 50% for startups who doesn't have tested the water. So see, this cost of capital means your value, whatever you are raising, reduce within 2 years, you are eating it away. Yeah, because that is what the investor or the cost, capital provider expectations are. However, when you take a bank loan with a 10%, bank thinks that within 10 years you will return his money. And that's why its cost of capital is 10%, right? That's why you pay your EMI every month or every year, 10%, and within 10 years it gets exhausted. Of course, I'm ignoring the compounding here. Now that's the cost of capital becomes a key role and which gets derived from a fundamental which Einstein even marveled. Finally, you apply the decision making techniques after you have all these 3 values in terms of currency or number, and you can see those number. You need to apply the matrices which we are trying to explore together today. So what are those matrices? Let's not beat bush, we should not beat the bush around. Let's go straight to those matrices. Which are those matrices which decide a fate of any project and its entrepreneur or a project manager in a large company? And these are the 4 well-known, historically used matrix which we are going to discuss today are internal rate of a return. Don't worry about these big terms. I will try to make it very simpler and with examples so you can relate with. Second, NPV, net present value. Third, payback period, which most of us know that if I am putting my money, what's the gestation period, when I will get my return, that everybody asks in India. At least India, as Indian, हम जरूर पूछते हैं, कितना मिलेगा? How much I will get and when I will get? When I will get my return, whatever I have invested for. And finally, a summary of profitability index, which is a nowadays a popular, however, is still unable to beat a parameter called NPV to judge any project viability. So, we have already understood capital budgeting, but let me little bit dwell more on capital budgeting in a sense to understand that why we even do it, and if we do it, how we develop it. Now, the core relies of capital budgeting in these three factors. First of all, here your expectation or your shareholder expectation or the investor who is going to join you expectation is to maximize your free cash flow. Remember this term. Everybody in investment banking or investment fraternity is abided by this terminology, even though you have a single penny in your account or not, or your company has generated that or not. Yeah. So how you do it? What you do is you find the investment opportunity, which is your idea, and you check the idea, you did the pre-feasibility study, and you reach to the end game where you are trying to develop now matrices and create analytical techniques. You take those investment opportunity only which drives the growth for you and create a shareholder value. That's the first tenet of this book, epic book. The first tenet is that you need to make sure that the project which you are choosing definitely drives the growth, but at the same time creates the shareholder value. Anybody who is a practitioner or teacher of finance, they can immediately relate with this terminology. Second, that should they never rely on solely on one parameter. That's a second tenet of this epic book of capital budgeting, is that you cannot choose in isolation one parameter, saying that Vivek Suman discussed, he's a practitioner of finance, he told me, he's a CFO awardee, he told us that NPV is best, so let me take that into isolation and judge my project. Then you will fail the purpose of capital budgeting. Third and most important aspect, which we cannot ignore in developing capital budgeter for any startup or even developed company, is the achieving maximum effectiveness. You need to incorporate through your organization mission. So your organization mission should get entrenched with these cash flow numbers, and then you see how you can enhance it and then make a calculation. So don't judge, as you say, right? Don't judge a book by its cover, right? Similarly, in the capital budgeting technique, don't judge by metrics first iteration numbers which you see. Try to increase the effectiveness by changing those cash flow using Monte Carlo simulation, sensitivity, cost of capital iteration. Okay, I will not go to VC. Let me try if I can get money from private equity player, or let me try if I get money from established companies who can come as a strategic investor with me, and where we help as a merger acquisition experts. If that happens, all this scenario will change your free cash flow, and that can have a different kind of matrix altogether. And then you should make a judgment. Okay. For example, let me take an example of SCL. Now, FCL capital budgeting process nowadays, they are established company, right? So whenever they start a new project, yeah, for example, in high performance computing industry, they are making an entry where supercomputer they will build and provide services for. If that is the case, they have taken as a new project. What they do is they link the cash flow which they expect. Their sales team will say, sir, high performance computing industry, according to ma'am, came into lecture and she said this industry is doing really well. Lot of IPOs are coming. We can see a growth of 23% annually. Let's venture into this. The boss, CFO, or the company CEO will stop that project manager and say, go back to the class of, FDP class of Galgotia, learn and come back that how to do a capital budgeting. You cannot just take a parameter that everybody is doing good, market is really nice, industry analysts are saying it is the way going forward. I cannot invest so much money into supercomputing or high performing computing. So what he has to do, he has to first of all decide what kind of free cash flow will happen, and that happens to the financial modeling. Once you create a financial model, you get a free cash flow in that model. You cannot stop there. You need to link that free cash flow to the R&D expenditure for innovation and competitive advantage, which HCL will create tomorrow. Link these two, then come back to CFO and CEO and explain your project. Explanation of constraint analysis also become critical in capital budgeting. That okay, you want to do a business of 20% of the total market. What about others? The first people who has already moved in, who have gone for IPO, what about them? Will they not register me? Or you can just claim I am HCL, I am the oldest company in the industry, people trust us, we have a deep pocket, we can kill anyone. If that would have been the case, Walmart might have entered Indian market without touching Flipkart. Walmart came first time in India through, if you know, Bharti channel. Yeah, the Airtel company, the group company. With them, Walmart tried to enter India market and they failed miserably. Same goes to the story of current geo financial partner, BlackRock is a god in finance industry. Most of the economy runs by their money, failed in India miserably in 2016 and went back. And they also did a tie-up with quite a well-known DSP Merrill Lynch company's owner at that point in time. Yeah, and they failed. Now they are coming back again with Geo, which is a Reliance company. Their split of shares is an interesting case study. We will discuss it some point later. So that's the story, that you cannot judge a project in isolation. It has to be ingrained into your goal, mission, and your competitive moat. Nowadays, moat is very critical even for a startup. If you don't have a moat, your idea can be brilliant, but it can be, if it can be replicated by anybody with the ease which you are doing, you are dead in the industry. Nobody will give you money even. So HCL focus will be on the target that they will shorten the innovation cycle, and then they will launch this project, and then only their capital budgeting can be justified, even though they might have a good return by coming into this industry. So what are those matrices? As we have learned, for example, in this case, they will calculate IRR on this high performance computing business first. So they will look into the cash flow and the investment upfront required, judge that when they will achieve of net present value for all this cash flow, the negative and the positive cash flow, zero, what is the rate of return at that point in time? It's an iterative process, but with the help of calculator and computing science, we can do it within seconds and come to know what's my real rate of return. Second, we also need to run a NPV matrix, which is net present value. I will define and give you the formulas and work through one calculation even, but I'm just giving you introductory right now. Then we will take a break, open a question answer, and then we will go to the next session. Finally, you look into the two other metrics, which are very simple and everybody knows, even the cost accountant knows, is a break-even point. And then you judge that when, which year, which month, which day I will get my money returned when I put this money, or every year, what is my situation? These two matrices tell you that. BEP, of course, our other team members are covering, so I'm not going into get into a detail of that. However, payback is a financial matrix, which we will try to cover, which gives you a date and time when your money is coming back to your pocket, whatever you invest with. And that's a critical judgment factor for any capital budgeting exercise. So let's go and work through the numbers. But before we go there, we have already crossed half an hour. I will open a question answer session. Otherwise, I don't know whether I'm audible even. So guys, please open your mic, raise your hands, tell your name, and ask a question. If this subject is very serious, I do understand that, but question can be equally serious. So please go ahead and ask. Gauravji, if you are there, you can open the mics for all.
Yes, sir.
Yeah.
So anyone, yeah, please go ahead.
Yeah, myself Anuj, and good
You know,
morning
finance
to
is
you.
something
And
which people fear.
Hi,
So
Anuj.
I just wanted to
sorry, but I think there is some other person.
Yeah, who is that
sir,
other
can I
person? Can you?
continue?
Yeah, Silpaji, please go ahead. Dr. Silpa, you can unmute
Yes,
yourself
sir.
and speak up.
Sir, actually, just yeah. Sir, finance is something which people always fear of. So I just wanted to ask you to give me some examples of time value of money, because with that
Okay.
concept, these the IRR, the NPV, and all these things are easy to understand. So just wanted to have a practical example of time value of money.
Okay. So let's do one thing. Let's play a game. Okay. I have two currencies in my hand, Silpaji, and this is for everyone. Okay. You can put in chat box your answers. One is 500. This note, I think it's not visible. Let me show the Gandhiji. He's most important person in country. So he's giving you 500 rupees today. Okay. He's giving you 500 rupees today. And I am ready to give you 1000 rupees after 5 years down the line. Okay. Which one you will take first? Vivek's or Gandhiji gift?
Whatever is available
500
today.
today or
Okay.
10 years down the
Mhm.
line, 1000 rupees. These two currency, two Gandhijis versus one Gandhiji. Give me an answer in chat box, or Silpaji, you tell me which one you will take.
Sir, I
1000
would go
rupees.
for the one which is available today.
Okay. So you are a smart investor who understand the time value of money. That's what it means. However, whoever has tried to answer 1000 rupees after 10 years down the line could be right if he has done his calculation and his cost of opportunity cost. We don't say cost of capital at that point in time because you are getting free anyway, right? So it's opportunity. So you have opportunity to take 500 today or 1000, say five. Okay, Shilpaji, let me change the question. After 3 years down the line, if I give you this
Okay.
1000, which one you will take? 500 today or 1000 3 years
Mm-hmm.
down the line?
Sir, again, I would go for 500 today.
Okay, so now your cost of capital is really dirt cheap. Please give me your cost of capital. Yeah, because you are saying in 3 years your money will not, it will more than it doubled. That's what your
Mm.
assumption is. My problem is that how you just put the current bank numbers. Say you are depositing this 500 you take today and put into bank, which gives you 10%. Let's assume that they are very generous with you and then they do 10% uh, uh, return on your 500 rupees. You know how much time it will take to get 1000 bucks? It will take minimum of 4 years, 3.5 to 4 years.
Mhm.
So when I'm giving you in 3 year 1000, you are a winner. You are getting extra. That's exactly time value of money. Nobody is right or wrong as long they understand that money has a value which depreciates over a period of time, like everyone,
Mhm.
including human being. We get older every day as it passes. However, I get younger, and so do you guys, because we are intellectually getting younger all the day. But generally, in the human tendency nature, things depreciate over a period of time. And that's the critical arrangement of time value of money. Given that I am talking to professor, I didn't cover the topic, but you are rightly said, Silpaji, this is the base of the whole capital budgeting. And it starts with that argument. Yeah, but given the time Gauravji is giving only 1 hour and the next speaker really gets disturbed, I changed my strategy rather than going to basic, assuming everybody is smart here and intellectually capable to understand my language. I have gone directly missing the part which was critical. So you asked me and I explained. So I think everybody is on board now. Am I not? If I'm making sense,
Thank you,
please
sir.
guys give me a thumbs up. Whoever is alive, who is just attending for the sake of attending. We also attend a lot of conferences sometimes just for the sake of attending. You don't raise your hand, but whoever is attending for gaining something, please give me a thumbs up. Yeah. Thank you, Aparna ji. Thank you, Kishore ji. Thank you, Anuj ji. Anuj ji, your question now. Please go ahead. Shilpa ji, did I answer your query?
Yes, sir. Yes. Very
Okay,
well.
Anuj ji, please go ahead.
Yeah, thank you so much for that last 2 days lecture as well, because I have been waiting to ask question for the last 2 days now.
Okay, please ask. If I remember the theory,
Yeah.
I may be able to answer. If it is a practical, I
No,
may be
no,
practical.
no. Okay, because I'm just curious to know that in your first day lecture, you have explained about that ROC and DIN numbers that we have to obtain. And yesterday you are just talking about that pitching and all that ideas. So I just want to know that what is the first step to go for that? Either we have to go for registration of company, or should we look for any partner or something like funding so that we can go for the registration, or what is the first step that I can go for?
Okay, so first step always in life for an entrepreneur is, according to government, register your company. According to entrepreneur, secure your idea.
Okay.
According to a trader or money-minded person or a maker, money maker, is to gain the first sales. According to, so it depends, Anuj, which realm of business you are in. However, government always believe that if you want to secure everything, yeah, your sales, your partnership, why don't you register you alone yourself? Because the idea is your anyway, right? The registration process is nowadays made so simple, which Gaurav will tell based on his experience now. He is much more educated because he's attending all the lectures by all the experts. Yeah, that first process is registration. If you do ROC registration, which is costing peanuts nowadays, a lot of people are giving this service at a rate which is unprecedented now, because of one click you can register your company as long as you have your Aadhaar card and the lease documents. So do that, automatically you protect your IP, you protect your first sales, you protect from the investor too. Sometimes the investor comes with a money mind. You might not be. You have an idea. You are an honest person. You have an idea with a brilliance where you are trying to solve a problem which is real. You have checked that on a scramper. You put on the business canvas. Yeah, no, business canvas is another way how you need to refine your idea and get into real money making mode. So you do all that, and then you realize the person who is coming to you, he has a completely different mindset. He want to even engulf your company, just buy your patent and get you out of the business. So that is why registering your company, government recommends, I do not recommend, government recommends should be done as a first step. However, I know in India nobody does. All our grihinis, our housemakers starts a business, they never registered. Yeah, they till the time they reach a crore, their husband comes and start biting their money from their jar. Yeah, then only they will go and register and protect their money. So government, that is why government recommend even grannies or housemakers who are running business from house need to register their business. Does that make sense, Anuji? Does that answer your query?
Yeah, so if I get the right, is it possible? So it may be possible to register a company without any prior sales or finances or something like that.
You just need a minimum amount for sole proprietorship. That also is not required. As just a current
Okay.
account with certain amount. That's it, and that is your deposit anyway. You don't need to withdraw the money, and maybe
Okay, thank
1,000
you
or
so much.
5,000 bucks, 1,000 to 5,000 bucks you need to pay into different government entity. Yeah, and that
Okay,
too
thank you
is,
so much.
I don't know. Are you a professor, Anuji, or you are an entrepreneur?
No, I'm a research scholar.
It's research scholar. Then you should not be worried about all this. Why? Because you can come to Galgotia new incepted incubation center, which I am planning with Gauravji as a next endeavor. Come there, get in house there, just register. You will get a chair, table as well, and you will get all this facility free of cost. So you don't need to have money at all. Yeah, as a research scholar,
Okay,
every
thank you
college
so
or
much.
university gives this.
Yeah, and these 3 days are so productive for me at least.
Thank you. I appreciate if you like my discussions. I never say lecture. I never give lecture. Okay. Anybody else? I see Neha Mathurji is raised hands. Do you have any question, or you are just supporting me? Thank you very much if you are supporting me.
Yes, sir.
Vicheng ji, welcome. How are you?
Yeah, I
Vecha
have a
Singh ji.
question, sir. How we can enrich return on investment with the help of capital budgeting?
Okay,
Wow.
so return of investment, the moment you say, it has two connotations. That's why I went into capital budgeting. Capital budgeting is a process where you don't have any money in real sense. Okay. And so I'm just defining it. There are two types of return on investment. One is return on equity, return on capital employed. That you metrics, there is a metrics, there is a ratio, return on equity, right? Which is net profit divided by the equity you deploy. Or return on capital employed, the total capital, which is debt and equity versus what is your cash or what is your return, EBIT level we take, EBIT we take. So that is a different formula which you cannot deploy for a startup or a project which you undertake. Given that this is a MSME, a startup class, I focused on the capital budgeting, which you do by these four matrices, which we have just discussed. Now we will go and discuss in detail another 20 minutes. Again, I'm short of time, so I will rush towards that
Vivek,
after one.
Vivek, I'll just take 1 minute.
Yes, Sateesh ji. So you
Yeah.
got the point. Just Sateesh ji, if you don't mind, let me finish with Vasant Singh.
Okay,
So
finish.
did you get the point? There are four metrics: IRR, NPV, payback period, break even, and profitability interest. There are several of other, those are also there, but these are the prominent ones, which we will discuss. Give me next 20 minutes and I will detail. Satish ji, please go ahead. Satish ji, I know because he's independent director with me on certain platforms, so we interact sometimes. Go ahead, Satish ji.
Thank you, sir. Thank you.
My just one simple question. See,
you,
when a MSME enterprise is into this exercise of doing capital budgeting for their enterprise, what basic risk factors they need to look into while doing this exercise? A reasonable, I can say, with some reasonable judgment, because a startup or an MSME concern may not be able to even foresee what type of risks they are going to face. But nevertheless, it's better if we know what sort of risks have to be taken into consideration when you do this exercise. And especially you're talking of return on investment. At this point of time, I think the risk factor also does play a role. So if you could elaborate, it will be helpful.
Absolutely, sir. Absolutely. Will be my pleasure. So again, there are enormous risks which are available at the at the disposal of God as well as internal factors to a MSME or an entrepreneur. Go and ask a pain of a shopkeeper who has been flooded in Mandi flood, which because of sustainability has happened. As you know, sustainable development is not happening or the climate change is happening. Mandi in Uttaranchal, I'm talking about Uttarakhand. What happened to him? He was prepared with all his projections that next day I am going to make $1 million and I will be rich and I will be flying high, or I will go and meet Sateesh ji and Vivek ji and Gaurav ji. His shop itself is gone into the water. So those kind of risk we cannot estimate, or neither even we can judge. Nobody could have judged COVID, even though large organization like Tata and Birlas. So coming back, what we can do as a simple a thumb rule which you can apply while doing a capital budgeting. So there are three inherent risk are involved in capital budgeting, and they are ingrained into the process of capital budgeting itself. So you see, I told you this 4-step: idea generation, project management, planning, monitoring, right? Idea generation itself, your idea can fail in this stamper unit. Project assessment, you can fail again. So the failure of your concept is first risk, which you need to judge. And that is why you need to do a preparation, and for which all these teachers, professors are learning a skill, right? To guide their cohorts so they do not go through this way. However, when they come and land to capital budgeting, and thank you very much for giving me a chance to re-explain the things so people can, take it 100%. It will be remembered by them. Satish ji, that thanks goes to you. These are another 4 steps where risk is inherited, which answers your query, and even the Vanche Singh ji's query. That how to work with this ROI. When I'm doing this ROI calculation, what are the risks I should judge? The first risk here would be, apart from externalities like COVID, flooding, etc., or God, for second things, or somebody who's envious of you and come and steal your shop, leave that apart. come to that stage of analyzing your business, we pass through that and we learn that there is an idea failure or project failure risk is there. These 4 steps has major risk, which you definitely need to consider and build into your model. The first one is the forecast, right? So when you do the forecast of your cash, that this is how I will receive cash, you need to make sure that you are running a kind of understanding what is the growth possible in the industry. So that is the risk number 2. And to understand the risk further, you see, I told you that how the cash flow will come. So sometime it will come with a growth, sometime it will even not come to you. Yeah, and that is why you need to run a sensitivity and scenario analysis with the help of Monte Carlo simulation to judge that second risk. Third risk, which gets inbuilt into your model of capital budgeting, is the discount rate, or we say cost of capital or cost of investment. There are thousands of names for that. Yeah, WACC in finance, as you are an independent director, I am a too. So that is finance, right? So we in finance term we say WACC, weighted average cost of capital. So these are the another risky area where you don't know when you will go to the market, who will give you the money and at what rate. For example, 1 year ago, I used to get money from bank at 6%, 7%. Yeah, and in US 2 years ago, I used to get at 1%. Today, the same money from bank, same bank, I am getting at 5.5% because in US, and in India, it is 7.5% because our government is increasing interest rate to control the inflation, right? And then we have a different kind of economic scenario as well. So these are the 3 major risks Sateesh ji or people like all who are attending need to address. Does this make sense, Sateesh ji? Can we move? Or if some, yeah, I saw Meenakshi Sundaram ji question.
Clear. Please proceed.
Thank you. Meenakshi Sundaram ji, can I take your question after completing major indicators? Is it possible? Can you allow me?
Yes, sir. Yes, sir. Please go ahead.
I think he is allowing. Okay, fine.
Yes.
So let's go and learn some, techniques and work with some numbers, and it will be fun. It will be definitely not boring, I can assure you. Yeah, don't go what is seen on the book cover, read the book. And the book reading for internal rate of return is very simple. What is internal rate of return? IRR, used by every finance, let it be a startup company or to established company. Why they talk about it? Because this is the number, this is a percentage number, like in your bank, you have interest rate. This is a number which applied to businesses. First of all, any business should have a percentage number as well, like in bank. Why it is required? Because then I can decide, Anuj ji can decide, sir, I am a research scholar, let me keep my $1 million in bank and get 5%. At least it has a number there, right? Because you are telling me to do a business and there is no percent number which I can compare with. So you understood? To compare your return, you need to judge it against certain other returns, and you need a number in terms of percentage, and that's this percentage. Okay, so now let's go to the second stage. Okay, sir, I understood. You want to compare investment in my business, Anuj business, or Silpa business, or Gaurav business versus bank or stock market or anywhere, whatever your capabilities are. You need to compare these two. I need a percentage number. So I go and do an internal rate of return. But tell me how it works in real sense. So it works that how much an investor put money in the business. For example, Agarwalji of our study story from Kutch, Gujarat, puts in his shop 1,000 rupees worth of good. Okay. Now every day there is a 10 rupees or 100 rupees worth of good are getting sold. So in that way, sold 10 rupees worth of good, but how much he's receiving out of that will decide your free cash flow. Correct? So I bought a glass of water, assume it is a bottled water, for 10 rupees, 1,000 worth. So that means 100 glass of water I have bought and put into Kutch, Gujarat. And it's a weather of summer and it is selling very fast. Now, when I sell this, I get 20 rupees each glass. Simple calculation, right? Double. Now that means I got 10 rupees cash in my pocket. Assume Agrawal ji has rented this shop from Meenakshi Sundaram ji, who's definitely not from Kutch, but say he has a shop and he has rented him. He wants 5 rupees per class. Simple calculation. He doesn't need to know what is monthly rental, annual rental. He's saying 5 rupees, you give it to me. So what is left with Agrawal ji? 5 rupees with an investment of 1,000. If he sells all his glasses, say in a year time, just assume in a year time, his return becomes how much? Anybody with mathematical background, please put that into chat box. He gets 5 rupees because he's selling at 20. He invested 10 rupees. How much is the return? Absolutely, sir. 50% is still. That guy is able to make 50% on his investment, not on profit, on his investment. So 5 rupees divided by 10, or 500 rupees divided by 1,000. He sold for 2,000. 500 he paid to Meenakshi Sundaram ji. 1,000 he paid to the glass wala bhaiya who gave them the glass, and 500 came to his pocket. So now he need to do 2 years to get his full 1,000 rupees back, right? That calculation, if I do with a discounting rate or time value of money, so 1 year is okay because the time value of money will depreciate by 365 days. But 2 year, you have 2 year of depreciation, right? So that madam which tried, Silpa madam who tried to guide us, that time and look plays a role here. And that's why this calculation, you see, IRR raised to 2. IRR is a known number which you are trying to find. But you see the NPV, the net present value, which is the time value of money of all your cash flow, should be 0. Yeah. And how you do that? So all cash flow, so say 500 this year, 500 next year, 1 plus IRR is unknown. So X, 1 time value of money for 1 year, 2 time for time value of money of 2 year, minus initial investment, which is 1,000, and the number which you get, you judge. It has to be 0. So it will be definitely a percentage number. That number cannot be 50. It has to be less than 50. And that is your rate of return. Clear? That's the internal rate of return in simple terms. For example, $10,000 investment at 20% IRR will generate 2,000 in profit every year. It's as simple as that. A higher IRR, if you have 2 projects, say selling glass of water and selling your educational courses, which you do. Yeah. And you have a IRR there, say 55%, because there is no cost other than your cost. And here you have a raw material cost too. So you get 40%. Which one you will select? The higher one you will select. As simple as that. Now let's move to next, because we are running out of time. I cannot develop on much more on one topic. So let's take the second and most important fundamental in capital budgeting, which is a net present value. Net present value is an this also is a matrix of time value of money of your cash flows. Okay, so whatever you receive. Same example, the only difference you see, what I have done is I have put up with 5,000 rupees, for example. Yeah, 5,000 crore if you are established company. So 5,000 crore rupees worth of project you are planning to invest in term of project A. The condition in all capital budgeting exercise and assumption which say, like you remember in economics, you have pari passu, etc., etc. We have here, or ceteris paribus, all things constant. Here we say all projects are mutually exclusive, which means that either I can invest in project A or I can invest in project V. I cannot invest in 50-50 in both. Okay, that's the assumption made here in these 2 parameters. And then only you can make a judgment in isolation, both of them. So project A has an outgo of 5,000 crores. Project B also has a 5,000 crore outgo. So if I am Agrawal ji, I am indifferent, right? In economics, there is another terminology which I don't want to bore you with. So I am indifferent to these 2 scenarios. Yeah. So I can put 5,000 here. I can put 5,000 there. I am happy to do. But then he made you professor of IIM, professor of Galgotia, professor of institution of prestige, like whoever has joined, and ask him, is it a good investment or is it a bad investment? For him, it is both same, right? Because his cash goes to both business, and he's sure he will run the business very well. He doesn't know how much cash will come, but he knows. So what you will do, you will judge him against the cash flow which he will receive. So you will ask him, tell me what is the return I'm going to get every year. So he will tell you, first year I'm going to get in this project 4,500, other project 1,000. Is it a good project? You will say, no, sir, I cannot judge like that. You give me the full cash flow of this business. Okay. So then he start giving you all these numbers which is displayed on the board. I think you are seeing on the full screen. Is it visible? Gauravji, please confirm to me. Is it on full screen and is it visible?
Sir. Yes, sir. Yes, sir.
Yes,
Okay.
yes.
Thank you. Thank you, sir. So 1,000, then third year, he says that I think third year, every 3 years in Kutch, there is a calamity and I may face that calamity and my shop will be closed. So I will not get any return if I'm doing project A. But project B is run by you only, sir. You can go online and you can keep doing business. Even though I get 1,000, that year also I will make 1,200. So just we are doing comparison between a glass of water sales versus a professor giving lectures on certain program. Okay, that's project A and project B. So project B has a consistent, you see, revenue. And once the project is known for his program, he starts getting even double of the income. So for Agarwalji, that's the cash flow. So you see, this cash flow totals to cash inflow, which is a green number, is 6,700, project A, the glass of water sales. While professor, sir, can get 8,200 in next 5 years. Yeah, minus 500, 5,000, which is our initial investment. If I have to just do the return, who is winning here, sir? All of you, sir, if you can speak, it will be really helpful. Tell me who is the winner just in terms of hard cash, which Agarwalji understand. Don't put your intellectual mind at play. Gauravji, you tell me, start with you only. Let's take a 1 minute break and let hear from everyone. Meenakshi Sundaram, sir, this is your time. You can ask even a question and tell me who is winning here, which project is winning. Just by seeing the hard cash, which Agarwalji will get. Anujji, you are not audible, Gauravji. Which project is winning?
Yes.
Sir, I think,
Yes, yes, ma'am. Please go ahead.
sir, please, Gaurav sir, if you can answer first, I'll
No,
answer
no.
later.
Ma'am, it will be better that you will interact.
Sir, according to me, I think project A.
Is winning. But hard cash wise, definitely it is not winning at just hard cash
But
basis.
if we just think of the hard cash, yes, but if we look at the overall IRR,
IRR, हाँ.
Okay, so you are seeing the matrices which were below. Oh, I could have hidden
yes.
that. Anyway, that question was assuming that you are not seeing and you cannot calculate your students. You, of course, talked about time value of money, so you know how it works. So that's the obvious answer. For Agrawal ji, obvious answer will be project project B, but Silpa ji and Gaurav ji and all of you are answering B. Yeah, as simple as that. And the reason is we understand the time value of money and we know the matrices now, which is listed here. Yeah. So IRR is giving me a value of 19.4% compared to 15.45%, which is enormously high. So I will definitely gung ho. While the net present value will be critical judgment because I'm getting 4 times extra as a net present value if I compare to V. So definitely in that case, I'm going ahead with the project A, which all of you have said yes to. So what it means that net present value is a calculation which gives the future cash flow discounted to present. You put the discount measure. So you here in NPV, I have put 15% discount rate. Yeah, stock market gives a return of 12%. Everybody can have their own hurdle rate. So I am investing or Agarwal is investing. I know he does a business in the stock market. He says, Vivek, in 5 years, I definitely earn 12% from the stock market. That's the statistics by RBI, not by me or anybody else. So I definitely need 15% from my businesses. Discount my number by that 15% that I use in NPV. Now you see, 15%, the moment 15% becomes my hurdle rate or 16%, now you tell me which project is good for me. Definitely in that case also project A becomes the good. Why? Because it is a 19%, which is much higher than the 15%. And if I use that into my NPV, I'm anyway seeing that NPV is giving me much larger number. compared to project B. And that's why the answer will be project A. In computer, there is a small formula called NPV equal to NPV, put your rate and then the cash flows. Close the bracket, including the 0th year cash flow. You have to put in sequence. You cannot put in any other sequence then, starting from 0, 1, 2, 3, 4, 5. Equal to sign, you will get the result. As simple as that. For IRR, same thing. Equal to sign, IRR. Here there is no percentage need to be mentioned because you are calculating percentage. You just put the cash flows. In Excel, it also asks you a guess. So you can put a guess that, look, my hurdle rate is 16. So anything 16 is comes in, it's okay. You put that Excel formula, you get all this result. Clear? Now let's go to the next part of it. A simple calculation. Again, I'm trying to reiterate the fact that sometime if I'm comparing between IRR and NPV, which just now I said, if my hurdle rate is 16%, then it is a trouble. Now, again, I'm same thing I'm emphasizing with another cash flow. You see this cash flow, 100,000 I invest in the beginning, and then every year I have some income. In other cash flow, 100,000 I invest in the business, and then I get by selling that business 161,000. Okay, and there is no income in between. Now, in this case, IRR remains 10%. Yeah, with the God grace, both IRR came same 10%. Now, how I should make a decision? In that case, I will do the NPV analysis and then I will judge the project. Yeah, right now it's just a simple calculation return wise. You see, IRR, Silpa ji, in this case, failed, isn't it? Will you agree with me? In this case, IRR has failed intellectual. So what we did, we looked into Agrawal ji method and saw that here the profit, at least on Agrawal ji method of simple return, is higher. But when I will do the discounting, I will come to know that NPV is still positive in one case, and thereby I will invest in that business. Clear? So that is why that is why I, in the beginning itself, Gaurav ji and Meenakshi Sundaram ji and all, Sateesh ji, I told that don't pick one parameter in isolation. Use at least these 4 or 5 in congruity or togetherness, and then judge your project. Okay, all of them which we are discussing today. So this was another example where we saw that IRR, if my hurdle rate is 15%, IRR suggests that I should take project A, right? In this case, IRR is higher in project A, but the cash flow wise, project V is better, isn't it? And in this case, then I will go to project B. So don't judge anything, and that is why it is said IRR is a better indicator. NPV is a better indicator. Let me repeat, NPV, net present value, is better indicator than internal rate of return. Okay, sir, that I understood. I can explain that to my cohorts next class, and they will become brilliant. They will also do the judgment based on that. But what about payback period and profitability index? So let's understand that first, what exactly it means. So payback period is as simple as this graph, which I have tried to show it here. Okay, what it means, that there is an investment which I did in the beginning, say 5,000, and then I have a return of 15,000. You saw that previous table which we discussed, this one. All this cash flow I put into this graph. Okay, so the moment my cash returns, means 100,000 I put, 15,000 of 6 years I get my line, this line crosses from negative to positive. The moment it touches to 0, like in case of IRR where NPV is 0, here in payback as well, the moment my negative, so I put 100,000, every year I got 5,000, I keep paying my 5,000, 5,000, 5,000, or 15,000, 15,000. 6th year or 6.5 years, say, I will get my equal to 0. Yeah, the moment 100,000 becomes 0, that is my payback period. So whatever I'm investing, 5 year, 45 days is my payback period. Clear? That's as simple as that. There is nowadays discounting payback as well, which similarly the time value of money calculation, you have to put the cash flow with discounting rate, and then you compare with your initial investment. And so the days are literally little farther away. Yeah. So if in payback, simple payback, you have 5.45 years, in discounted cash flow, it will go from 6 years onwards. Clear? Then there is another model which is based on the NPV. Yeah, so few scholars like you developed another model. It's not very old. Yeah, it's a 20-30 years old only. So they develop profitability index to judge different mutually exclusive as well as mutually complementing projects. So they increase the scope of your judgment. However, this remains a bad indicator compared to NPV, and we will discuss that into the next slide. And how you do it? You put the present value of all future cash flows, including negative, or positive cash flows. Divide that by the initial investment. So it's a ratio. And you remember we discussed in working capital ratio of 1 and onwards up to 3 is good. After 3 and below 1 is bad. Similar in the profitability index as well. Up to it is 1 and above, it is counted. So industry standards are there. Based on the industry, you have to judge this again. So now I am now culminating my discussion without taking further madam's time. I think Stuti Saxenaji's time. Let me conclude the lecture by just giving you which one has which kind of problem. So I said NPV. NPV remains a decision-making ruler in the country or in the world. And the reason being, it considers the time value of money, which Silpaji was trying to illustrate. Because Sir Einstein has counted time value of money as a 8 wonder. Yeah, no doubt about that. And how, when you will invest, only criteria when the NPV is greater than 0 rupees. You invest in that business, as simple as that. It also consider the cash flow till the life. That's another advantage. However, what are the disadvantages? So payback period ignores the time value of money. So you go to the discounted payback. But also another problem is does not consider the cash flow after the PPV period. The moment you hit the 0, you forget the next cash flow. So that's why discounted or the simple is not as equivalent. You need to judge against the industry estimates. So that 5 year or 6 year, you judge based on the industry and your hurdle as well. That 5 saal tak main wait kar sakta hun ki nahi. Third, IRR, very good measure, but as I shown you, certain cases it fails 10% while the NPV is higher in one case. It does not consider the economy of scale, which Jamie Dimon has talked about it and said that if you don't have economy of scale, we could have remained a cattle. Yeah, Jamie Dimon Sahab is an investment banker, well known in US, and he's one of the pioneers in this area. Also, IRR takes the assumption of discounting and reinvestment at the same rate, which is a flaw in itself. And you judge this according to your hurdle rate. So stock market rate, your interest income, which you are getting against that rate, or WACC in real sense. PI, project sometime can have a PI with vast difference. Yeah, in absolute rupees term return, in that case, NPV is still better. PI is good measure, but NPV is still better when you have a vast difference between two projects. And PI, anything greater than 1 is a go decision which you make. Last point, key takeaway, which I want to summarize here, and I think you should carry forward in your life. Capital budgeting is important because companies use NPV and decide whether they should do a new project and worth investing in. Second, in the business valuation, also you use NPV and judge whether your numbers are accordingly correct or not. And sometime in DCF calculation, NPV is the number, which is value of your company. In merger and acquisition, we use daily basis because whether this acquisition is right or wrong can be only judged by NPV number. Finally, real estate nowadays, all people use NPV to calculate whether their yield is right or wrong. Apart from IRR yield, they also judge on the NPV. With that, I end my lecture. If anybody has a question, otherwise I will hand over baton to Stutiji to take it forward.
Sir, Priyank here, Dr. Priyank. Hello.
Go ahead, Priyanji.
Sir, from Galgotias University. Sir, I just want to know right now the difference between traditional payback and a discounted payback. I'm just a bit confused in that.
Simple, Priyanji. Very rightly asked, but simple difference. In the simple payback, you just use the free cash flows. Yeah, use that number and judge with your investment. So your investment number is in negative. Keep adding your cash flow, which are positive, to that number. The moment it comes to 0, you have a simple payback. When you do discounting year on year of those numbers, the cash flow which you have, like we did in case of NPV, you do the each year numbers discounted number, and then you start adding back to your investment because investment sitting on 0 has no discounting. Then whatever number you get is your discounted payback. Does that make sense to you?
Thank you, sir. Thank you. Thank you so much.
Anybody, any question? Okay, if nobody has question, then Gauravji, please conclude. Thank you.
Thank you so much, sir. So, dear participant, if you have any query, just unmute yourself and ask your query. I think B. Meenakshi ma'am has some query. She has raised the hand.
Sir, I think it is Meenakshi Sundaram, sir, right?
Okay.
Sir, one more query, Dr. Priyansh here.
Yeah,
Hello.
doctor, please go ahead.
I just want to know that जो आपने internal rate of return के बारे में बताया ना सर, तो वो सर हमेशा फिक्स रहता है कि it will change with the time for मतलब different organization, मतलब different businesses. Just for like अगर हम agriculture या कहीं या real estate, it's been different for us. Yeah, we have to compute the one value, that 10%, 15%. Just you have mentioned about stock, that 15% will be there.
Yeah. So look, certain industry standard never changes, but as you said, agribusiness has a different kind of IRR rate. So even though you get in your business IRR of 7%, which is much lower than the stock market, but the industry of agriculture gives around 3 to 5%. I'm giving you the number. That's the number. Yeah. If you are in rice processing, you can go and check. Nobody earns more than 3 to 5%. Yeah, in real terms, because usme karna hi kya hai, value addition is very less, and thereby you have to judge based on your industry standard of IRR, not based on the stock market. Or so we say comparable. You need to judge your investment against the real comparables. So it changes.
Thank you, sir. Thank you so much.
It's dynamic.
Thank you so much. Okay, sir. I got it, sir.
Thank you. Thank you so much, sir, for conducting very interactive session. Again, once again, I have came up with the another digital memento for you. So kindly accept the e-memento that is expressing our gratitude. Yes, sir.
I will convert these mementos in NFT and make a lot of money. Non-fungible tokens now. Thank you. Appreciate that.
Thank you. Thank you so much, sir.
Pleasure.
So, should we move ahead, sir?
Yes,
with
please.
your permission.
Yes,
Okay.
With your lectures.
Okay. So, dear participant, our next speaker has joined with us, Dr. Divya Rajput, ma'am. She is highly resourceful, motivated, enthusiastic professional with 21 years of experience in corporate, higher education, and government, of which 17 years were multitasked in leadership and execution roles, fostering innovation, nurturing cohesive learning atmosphere, managing teaching operation, and strategic business head. As a startup evangelist, she has mentored more than 600 entrepreneurs and built capacity of more than 200 incubator managers. She is focused on providing earlier launchpad to women-led startup. She has worked in leadership position with Delhi Business School of team of 3 to 300 staff across India. She has worked with peer teams across 21 locations. As head of business innovation and IT service with IICA under Ministry of Corporate Affairs, Government of India, she advocated policy reform for new ventures and developed institutional partnership with other ministries, leading institutions and corporate. She has worked as advisor to Technology Development Board and IIM Lucknow, Noida campus. She was awarded the Youth Excellence Award by the Russian Culture Center in 2009 for leading Delhi Business School among top B schools in the country, and Women Excellence Award by CMO Council Singapore for the expansion of brand Pan India. She has also received the Women Excellence Award at the American Center, New Delhi in 2017. She is an alumni of the UST Taiwan GCTF Women Entrepreneurs in Tech Program 2017, and she is a climate change reality leader and coach on sustainability and circular economy practices. So we are very thankful and grateful to you, ma'am, that you have accepted our invitation to become the keynote speaker at this 2 weeks faculty development program. And we would like to invite you to deliver your talk, ma'am. Over to you, ma'am.
Right. Thank you so much. And special thanks to my previous speaker. That's a very important and all the time when we talk about fundraising, I think these are all the numbers and all the jargons that we get stuck with. So thank you so much for putting it so very beautifully well. And thank you, Galgotia University, for having me here. And I just hope I'm able to follow in steps of my previous speaker. So
thank you very much, ma'am.
I have screen sharing, right?
Yeah, thank you very much.
Yeah. So it's always good to revise, as I told Dr. Gaurav.
Please continue, ma'am. Thank you.
Right. I hope the screen is visible.
Yes, ma'am. It is visible.
Okay. Right. So the topic given to me, ideally, I should have classified this as a trade secret, because incubators may, building a good pipeline of entrepreneurs is all the trick. And this is something, I often tell people. People feel कि अरे entrepreneurs तो कहीं से भी आ जाते हैं, but ऐसा होता नहीं है. So, I think the biggest trick is to make a good pipeline of entrepreneurs, and then thereafter track their performance and look at or monitor their growth, right? So that's what we'll focus on today in this session. How we specifically categorize startups in different under different levels, I would say, or stages of their venture. That's where the selection happens. Then there is a simple process of training, and the training, see, now all the principles of adult learning come into play the moment we have to train entrepreneurs, because these are not students. They'll not listen. They've decided to become an entrepreneur only because they like their own autonomy. And then comes the funding. We have to so what we've realized is that while we are very selective with which startups get incubated here, still we have not been able to give more than invest in more than 25% of our portfolio companies. So that's where we build our portfolio. So it's hard to despite training them all alike, it's very hard to even invest in all of them. And then as we mentor them on an ongoing basis, and we continue monitoring their performance. So that's how I have tried to structure. Apart from that, I'll also talk a little more about the many stakeholders and factors which you'll have to keep in mind if you plan entrepreneurship programs. So it cannot run in silos. Entrepreneurship doesn't run in silos. So something I often quote is that कृष्ण जी के लिए कहा जाता था, कान्हा के लिए कहा जाता था कि it takes a whole village to raise a child. So I would say entrepreneur के केस में it takes a whole nation to raise a good entrepreneur. मतलब इतना effort लगता है to raise good entrepreneurs. Now we all know that globally 92% of ideas fail. And mostly they fail not because the technology is not good. And this is a global number. I'm talking about a global number here. 92% of all ideas fail. So they majorly fail because there is either no market, so insufficient validation. Maybe there is market, but could be 20 years down the line, right? It's not an active market as on today. So there is no sufficient validation of what these entrepreneurs are wanting to do. It is an imbalanced team. So, there are many people in the team. There could be many people in the team, but then no clear role identification. People don't know what they're working on. and also not all skill sets are being managed. So that's also happens. It's also a poor, sometimes it's also a poor cultural acumen, because a lot of entrepreneurs actually create businesses or create technologies basis what they feel is a problem, not by validating it with the customer. So they don't reach out to understand the voice of market. Okay, once they don't do that, or they don't understand the voice of market, there is always going to be a problem that these ideas, which are created in silos or in uh, workshops, or even in incubators, it is likely to fail. And of course, they fall into the valley of death. So valley of death is, if you remember a bell-shaped curve, so if you reverse that bell-shaped curve, there's a valley of death, where either the cash burn is too high, and my previous speaker did talk about the customer acquisition cost and the payout period and how all of that is balanced. So, in case the cash burnout is higher than the receivables, and all other factors are there, that there's no market, it's an imbalanced team, poor cultural acumen, then they are likely to fall into the valley of death. So, and once anybody falls in valley of death, it's very hard uh, to bring them out. So I'm talking about a startup. So always these are various things we start to understand. That's where we start. So if there is a startup which comes to us, and at JSS Step Noida, we are very fortunate. We have a free flow of startups. So on an average, every week we get about 5 to 6 walk-ins just on referral basis. Right. So when they come, that's what we start to understand. Have they studied their market well? Is their team a balanced team, or is it just a solo founder who feels कि सब कुछ outsource करा दूंगा और काम चल जाएगा? And also, do they even understand the cultural acumen of where they are operating? They understand their customer persona. Do they understand किस customer को sell करने वाले हैं? Right. And of course, are they burning more cash than they are going to ever get back? So is there potential in that market where they're wanting to penetrate to give them returns on a faster pace? So that's what we start to understand from them. Let's quickly also, in the meantime, as I said, it takes a full nation to develop successful startups. Let's also look at innovation-based economic process. So there's basic research, and this is something I talked last week as well. When we talked about technology commercialization. So I'll just repeat it a bit. So there's basic research, there's innovation, there's a commercialization ecosystem, there's education, research, and technology transfer. There's a lot of wisdom in the incubator, because such experienced mentors come to incubators. There are philanthropic entities also. There is government and policy action. There are funding institutions, and there are markets and business relationships, which leads to economic impact. And then there is possibility of licensing technology, creating startups, and doing some sponsored research. Now, all of this goes back and feeds back in the innovation ecosystem. So that is why innovation actually leads or fuels economy. That's how it does that. So आप ये मत सोचिए कि we are only spending money. We are not just investing in startup. We are actually creating economic process. That's what we do. So there are these few keys to innovation economies where you have to understand that we mostly try and start locally. We create a very good local solution and then expand it, globally. For example, if you've seen the movie on Facebook, the social network, you'll understand that the Facebook was not created for the world. It was created for students of the university where Mark Zuckerberg was studying. So you mostly try and exploit the local advantage first. Then you develop and diffuse innovation knowledge. You encourage self-determination. accelerate through collaboration. So collaboration is the key to growth. No innovation happens, as I said, in silos. And we share, ensure that electrons are shared, but then atoms keep colliding. So there is enough momentum also which is created, and we engage in a virtuous cycle. So let's look at a very interesting definition of success. Success is stumbling from failure to failure with no loss of enthusiasm, said Sir Winston Churchill. That's what we tell all our entrepreneurs. So I think this is something I told last session also. Entrepreneurs are brave people. It's like and especially people like us tell them to keep their ego outside before they come to a step. So it's about there is going to be failures, but then there is no loss of enthusiasm, and we keep bouncing off. And in the process, there is some funding which actually is so little, it acts like liquid oxygen. So आपने सुना होगा liquid जीने नहीं देता और oxygen उसको मरने नहीं देता. That's the kind of investment we do. But then there are a lot of mentors and there are a lot of sounding boards who sit with you, with these entrepreneurs, to discuss whether what they're doing is making a lot of sense or not. Let's look at a comprehensive innovation support system, right? What you see on your screen is an entrepreneurial process. It's a simple process of discover. Then there is some capital infusion which is done. That's what we call as seed funding. Then we prepare. Then there is incubation, and there is again capital infusion. Who are the stakeholders in this innovation ecosystem? So there are non-profits, there are industry associations, there are SMEs, there are government at every level, there are companies, there are R&D labs, and there are universities. What are the environmental factors, which drive any innovation support system? So there has to be access to talent, and that's what makes India a great, a very lucrative innovation ecosystem as on today, because there is access to talent. Then access to technology, and that's where we mostly look at our universities and R&D labs to keep creating technology which can be commercialized through startups. And then there is access to capital. As of now, I would say there is a lot of capital available. Capital ka problem nahi hai, right? There is also access to know-how. Then there is robust business infrastructure. There is supportive public policies, and there is a very supportive culture. So where parents don't shy away कि मेरे बच्चे entrepreneur बन रहे हैं, they accept it. So now that culture is also happening. In fact, show like Shark Tank India, these are the ones which actually elevate the level of entrepreneurship. They've elevated the level of entrepreneurship in culturally, I would say, right? So these are the different environmental factors, which also support a comprehensive innovation support system. Now, in case any of you is actually planning an incubator or planning entrepreneurship programs, you have to understand your ecosystem as well. So there is cultural context where we try and understand the tolerance for failure. We also try and understand the attitude towards success, the risk profile, entrepreneurial encouragement. Is there a gender bias? So a lot of work is being done around women entrepreneurship, because not more than 2% of women-led companies have raised VC funding. So it feels that there is definitely some gender bias. And most important is the aspect of trust. So even for investors or angel investors, that's where the early level of capital infusion happens. So that's something which happens on trust. Okay. Next comes the economic context, where we start to understand the wage structures, then the employment rates, clusters and growth sectors. So it can be inorganic versus organic growth. There is an interesting story of IBM software development in which happened in Austin. So where they looked at sector cluster to provide service, then cluster led to spin-off of staff to create companies. So IBM is one company which promotes a lot of corporate innovation. IBM, a lot of staff actually spin out companies from IBM. So it's by culture there, and new companies then fuel growth. And that's how, Austin actually became a leading software center. So when new clusters are being formed right now, for example, a lot of work is happening in clean tech, biosciences, transportation, water, waste management, cybersecurity, gaming. This is how clusters are formed. Now, what happens when clusters are formed? Anyone can give me any idea? आप लोग FDP एक attend कर रहे हैं, I'm sure किसी speaker ने बात की होगी. Why are clusters important? Yeah, anybody who comes from a management background can also tell me why are clusters important from economic context.
Power of concentration of a particular industry in an area push
Right.
the economy in different direction. China has followed very
Sure.
well, and that's why their cities are known for particular operation.
Right, right. Thank you so much. Yeah, so that's very helpful. I could not have articulated it so well. So, can I get your name, please? Because I'm just looking at the screen.
It's a Vivek
Vivek.
Suman here.
Acha, Vivek ji, aapne bataya. Thank you so much, Vivek
Yes.
ji. That is a very yes. So, yeah. So, unfortunately, I'm not able to see anyone. I can only see my screen. So, yeah, that's a very useful point. In fact, a couple of clusters are also coming up in India as well. We have the software cluster, we have EV clusters, we have automobile clusters. हमारे जो IMTs हैं in Haryana especially, most of them are clusters. So, these industrial model townships.
GG.
So these are also clusters. Yeah. So clusters इसलिए जरूरी होते हैं because then there is concentration of all the ancillaries as well as concentration of talent. I mean labor. मतलब जितने factors हैं innovation के, all of them are then concentrated at the same place, and accordingly then the logistics can also be formed. So it helps both buyer and seller. That's why clusters are being formed. So that's where we look at the economic context as well. Then something we have to also look at is the regulatory context. So IP laws and regulations, tax policies, legal process and structures, and business regulations. So I'll not go in deep there. Then is the investment context. So, investor risk profile. In fact, something I want to share here. So, a few years back, when I was working with UT Austin, I was heading a program called South Asia Connect. So when I went to Bangladesh, Bhutan, Nepal, Sri Lanka, I mean India, it was a 5-country program. So I went to all these countries, and I looked at their investor profiles. And I mean, while there are startups doing innovation, there are not enough investors. There are not even enough angel investors also. Because for angel investors to flourish, there has to be the next level of investor available. So if you could imagine, the countries are still so small and the innovation structure is still so small that like in India, we have all the level of investors available right now for startups. In these countries, because of this, early stages of ecosystem, innovation ecosystem, even the investor profile is not higher. India में तो अभी सब कुछ हो रहा है, so we have all ticket investments happening. So also something which is very important is the availability of capital, both domestic and FDI. One thing I want to sound about FDI is that it also depends on the reputation of the country. That's where FDI comes. So जब तक हम लोग एक developing nation रहेंगे, हमारी FDI उसी तरह की आएगी यहाँ पे. So it's also important, we are backed by innovation. I mean, innovation has to be leading in a way. That's where investments will keep coming in the country. And then, of course, providing exit opportunities. So, for the startups to look at exit opportunities and provide exit opportunities, that's something, which is important from the investment context as well. So that's what when we look at these entrepreneurs to build the pipeline at step. Next comes the institutional context. I did talk about, a triple helix model where industry, academia, and government is involved. We talk about, we look at collaboration, competition, and co-optation. So, where actually competition can also combine to form bigger companies. So we even look at that. Is there a possibility? Because, one question I often ask all the entrepreneurs is that till how long do you want to continue doing this startup? For example, we have a car cleaning startup which is doing very well right now. So I often ask the founder, "Ki kab tak car saaf karni hai?" So the purpose is not to demean them. The purpose is to understand what is the next steps for them. How are they looking at uh, uh, partnering? Like they partnered with most of the EV fleet. So jitni EV cars hain, unki cleaning is happening right now by a startup incubated at Step. So they do waterless cleaning. They've come up with their own waterless solutions and they do waterless cleaning. So it's important to understand these institutional context as well. And then look at, the networks. How do they collaborate? Is the turf war neutral? Then also look at, the regional context. Is there integration of local versus state versus central government jurisdictions? Because that is something which helps startups to flourish, right? I'm sure many of you are part of the Startup UP ecosystem, would know that when state government also starts to support startups, then it definitely accelerates growth of the innovation ecosystem in the state. So the question you have to be asking here is, how does this work in your institution, right? So how have you created an institutional context for entrepreneurs to flourish in your institution? So these are some of the questions you'll need to answer, if you're planning an incubator.
Can you,
This is how
madam,
the total
just going to the
ecosystem
previous
looks like.
slide,
Thank you.
just going to the previous slide for a minute. Satish here.
Yes.
Yeah. You were talking about the institutional context,
Did it come back?
organizational.
Yeah. Yes.
Could you elaborate a little bit on this tribe helix, industry, academia, government, collaboration, competition, co-optation? I'm unable to understand in what context you mentioned these things.
Yeah. So yeah. Okay. So there. If you look at it as a simple value chain, there is government which is the initial investor in any kind of R&D. Most of the R&D funds come from public funds, the government funds, right? And then there is academia, which provides skilling, so training, which also conducts research, and then there is a possibility of creation of any kind of IP. And then there is industry, which is where commercialization happens. So what I had mentioned last time is that unless okay, let me put it again. So science converts money into knowledge, right? So the public funds which we use for R&D is what science uses to convert to knowledge. So it could be publications, could be IPR, could be, right? But it is only technology commercialization which actually gives it back. So by commercializing it in partnership with industry and also government, in fact, government is a big stakeholder for even commercialization. Government can actually provide a lot of contracts for commercialization of technology. So while academia has its own role to play in the triple helix, So, and industry can also provide then money, like I just showed, for sponsored research as well. So there is possibility of sponsored research. There's a possibility of commercialization with industry. Also, as I just gave you example of IBM, which heavily deals in corporate innovation, they also spin off companies. So they allow their own companies, or sorry, their own staff to also set up companies. So when we look at the institutional context, right, we also look at how this triple helix engages with each other, right? So the industry, the academia, and the government. So unless they will engage with each other, uh, innovation as an organization, I would say, or an institution will not emerge.
Got it.
Have I been able to explain that, sir?
Yeah, got it. You can go ahead.
Right. Thank you. Okay, so this is how the total innovation support system looks like. So I just mentioned to you that there are some, there's an entrepreneurial process. Then I mentioned to you that there are these stakeholders. I also mentioned to you there are environmental factors. And now I want you to look at the innovation support system. So starting with, technology sourcing. So there is technology sourcing, which is required to be done, technology transfer and commercialization, gap and seed funds. So there are different level of seed funds also available in the ecosystem now. There is mentoring, which is given by experts. There is incubation acceleration. That's a full process in itself. There are capital networks. There are advisory services. There are educational programs. There are hands-on training. There's coordination and integration. There is proactive innovation. There is technology assessment, right? So all these aspects actually constitute a comprehensive innovation support system. So there is innovation, there is an entrepreneurial process, there are stakeholders involved, and there is an environment which is conducive to innovation. That's where innovation happens. So it cannot happen in silos, is what I keep saying. So it's important for us to understand this, as well as for even entrepreneurs to understand this whole ecosystem. So let's quickly look at the questions to ponder. What are the sources of technologies? Who are your stakeholders? What are the sources of capital? What is the infrastructure availability, physical and human both? I mean, where is it more conducive? Where is it easy to set? Where is it lesser bureaucratic? And then, of course, what is the incubator business model? So how is incubator going to pay the staff, pay for the electricity bills, pay for other expenses? And yes, you can discuss these at lunch if you want. I mean, especially for those who are wanting to set up an incubator. So, before you start to even plan an incubator, these are all the aspects you have to look at. So, okay. So as I said, this was the innovation support system.
Can you just elaborate a little bit on the incubator business model? Can you elaborate a little bit?
Sir, actually, I would like to stick to the entrepreneurial because otherwise that is too deep. Incubator business model is very deep.
Okay, got it.
I can go on. I mean, yeah. But I can maybe do it sometime separately. I do, the incubator manager training programs also. So I can do that separately. It's very deep, is what I mean to say. I have to focus on the entrepreneurship part of it. Only the entrepreneur basically part of it. So, okay, so these are the critical success factors that we also always look at. So, what is their affiliation? Are they autonomous, self-sustaining, hopefully on a singular mission? Because, if they are absorbed in too many things, so something we look at very specifically in entrepreneurs is, what is their mission to do what they're wanting to do? I mean, is it just a hobby? Is it just time pass for them? or are they 100% absorbed in it? And then, we look at the specific need and vision. What are the key internal cultural values? So, and also the cultural values which keep the team united, right? And then the full-time risk accepting staff. That's, again, very important, because most of the startups, they are not able to pay high salaries. So obviously, and there's no guarantee of success also. So, finding full-time risk accepting staff is also another task. But we look at that. So, these are some of the factors which we have given to you, where they come from, right? Uh, are they self-sustaining? So, have they bootstrapped? Do they have enough runway for or at least a year or 2 years? At least a year is what I look at before, even we can infuse funds, because we don't infuse funds anytime before 6 months. Till they are here with us till 6 months. I mean, we keep assessing them, assessing their team, what's their mission, why they're doing it. Are they even serious about what they're telling us? Because people can come and fake every time. So, we spend a lot of time with our entrepreneurs. Some of the more critical success factors you'll have to look at is the entrepreneurial leader. So, the main founder or a group of founders. The balanced representation among mentors, stakeholders, service providers, entrepreneurs. Something I have also figured out over years is that if there are entrepreneurs who are coming with, so they have to come up with something very critical in their value chain. It can be either from the supplier side, or it can either be from the customer side. They should have huge database either of the suppliers or the customers. किसी से शुरू करना होगा उनको. So they cannot be, otherwise what will happen is, even after you will seed fund them or invest in them, they'll struggle to find their feet on ground. They'll struggle to keep finding their customers. So it's better, and I'll come in detail about it. Few minutes, I'll talk more about this, what I mean. So that's something we look at very specifically, that what is that critical mass they are bringing with themselves? How are they so confident that their business is going to do well? And then, of course, the customer focus. So it's all about, the company can only stand if they know their customer. And proactive networking. So, we get a lot of technology entrepreneurs, and sometimes they are shy, but, that's where a team comes handy. So the startup has to be networking, at every level. And then comes, dual validation. So we look at the host and, where they're coming from. Again, repeating the same, where they come from basically, and have they built a reputation for themselves? So we even look at that. In fact, we are even contemplating if we should start looking at the CIBIL score. And also, if they have an influence, an authority in what they are doing. So how are they creating an authority in whatever they are producing? Okay. Then I think I can skip this slide. Okay. This too. Yeah. Now this is, what I have to be doing in the session today. Selecting, tracking, and graduating start companies. So at college level or university level, there could be different levels of selection. You could be selecting for a business plan competition. So most of the IIC, so Institution Innovation Councils, organize business plan competitions, right? So there could be criteria you can lay down for selection for business plan competition. Then there is also selection which we do for grant programs. Sometimes we get government grants also, and we also make selections for the grant program. Now, see, one thing about grant programs is that money is non-returnable. A number of times, and I have been on several committees where I have seen that a lot of startups are very good with taking grant. And, in fact, there was a program by UK aid, US aid called Millennium Alliance. And I used to be on their review committee. So I remember, asking them, Fiki used to manage that program. So I remember asking the team that how many of your startups actually close their ventures after the grants end? And, to my horror, it was, or rather to their horror, it was 95%. So 95% of their, startups or companies or beneficiaries closed their ventures after the grants ended. So somehow, it is not a very good be in. So my suggestion is going to be whenever you're making selection for grant programs, please ensure that you ask the startup or the innovator or the entrepreneur, whoever he or she is, that what is there. See, because a small grant is never sufficient to roll out a full company. It's just like, again, liquid oxygen, na marne dega na jeene dega types. But yeah, it will just take them to the next level. Right. So you have to ask them what is their idea about raising funding after grant ends. Because if they close the work after grant has ended, I think it's the biggest waste of public R&D funds. I mean, it's your and my tax money, right? So let's be conscious about it. So whenever you're selecting for grants, please make sure that they have an understanding that it is not a project they are working on. So we don't treat companies as a project, that's for sure. We treat companies as a ongoing institution building exercise, and that's why we want our entrepreneurs or innovators to look at grants. That after grant, it has to go for the next level. It has to go for commercialization, or they have to raise next round of funding. We will support them. We'll do everything, but then they have to at least understand this. So that's what we do. We do a lot of time investment in, understanding that what is their ongoing plan. Then comes the selection for incubation. Incubation at step, we do an equity-free incubation. We don't charge upfront for incubation. A lot of incubators do, we do not. We, however, have two levels of fee that we charge towards incubation. It is either a physical incubation model or a hybrid. So we charge them, but then we provide them same services. Also, a lot of member benefit. Other member benefits also. There are partners deals. There are credits from AWS. There are other benefits we keep providing. Then comes the selection for seed funding. So when we are selecting candidates for seed funding, that's where, as I said, we look at, okay, so we provide seed funding only in our incubated companies. We don't provide seed funding in outside companies, right? We are beginning to look at some of the, in co-investing with some of the VC funds. But then we'll see, so we're still working on it through our accelerator. But as far as, seed funding is concerned, entrepreneurs have to be incubated here minimum 3 months. We take almost 6 months even before making a decision whether we are going to seed fund in them or not. And that's why, it's important for me to understand, as well as our team, that, whether they have a runway of at least 1 year before any seed funding is infused in them. So there are different, levels. Again, the 3 phases after the selections have been done, or rather, the entire process of, or programming as we call it, right? So phase 1 is planning, promotion, and outreach. We majorly do it through social media and our own partner networks. Phase 2 is selection, onboarding, and monitoring and evaluation. So when we make the selection and we onboard them, after that, there is a mandatory training program of 3 months. So they have to undergo that training program. And then, we keep we keep assessing their progress. So every 3 months, we organize a review committee meeting. And then comes the phase 3, which is graduation and reviews. So, we keep, even after graduating, if we have seed funded in a particular company, then also till our investment is there, we'll continue with the quarterly reviews. That's what we do. That's the process we follow, right? After the giving you the different levels of selection. Now, what are the 4 major risks for startups? one is the magic. So creating that magic sauce. Second is the market. Third is the management, and fourth is the money. So let's quickly look at these before I uh, um, give you some other aspects or some other parameters you have to be knowing. So looking at magic risk, that's where we encourage them to come up with a unique value proposition. So technology development design is one of the most important aspect while creating a magical sauce uh, for any startup. So they have to be building their partnership models. They have to be developing their own R&D or maybe adopting technology. Also looking at technology which is good enough to launch. So launch basically a minimum viable product. Understand technology future trends and tools. Looking at reducing market risk, we insist on customer validation data. So we insist that they go and talk to at least 100 customers if they've not talked yet. Because if you remember my first slide today, I had mentioned that most of them fail because they've not done a good market validation. Also develop a market expert network, provide advice on go-to-market strategy, develop partners outside immediate geographic area, and investigate the competition and develop a competitive matrix. So let me show you a competitive matrix. So, this is how a typical competitive matrix looks like. So on, the left side, the first column, we basically compare the features, and on top, we compare our competition. So, that's what we compare all the time, right? So creating a competitive matrix will actually help the company know what are their what is their competition actually doing, and how are they creating a 10x superior product. Then comes reducing management risk. So provide human resource and interview assistance. That's something we can provide. I mean, we do provide. So we have some of our startups who have hiring services. So we help them map with each other. Also help them build an advisory board. We have a full-time mentor in residence here at STEP. So, after a few sessions, few complimentary sessions, if they want, they can onboard him as well directly on their advisory board. And we also have a lot of domain experts, and even our own alumni. We've got amazing entrepreneur alumni ecosystem now. We also add team members with functional know-how. So that's where, at STEP, we have our own team, people who are fully working only on, incubation. You can also help them develop a CV bank, which your startups can access. Very importantly, insist that they network wisely. So with so many events happening, it's very hard to figure out, which is the most relevant one. And at times, startups can, endlessly spend their time only in getting, personal PR. So personal PR is good, but then, we also emphasize that they know if it is translating to revenues or growth for their startup. So we don't tell them to go and attend all the events unless it makes sense. For reducing money risk, it's important to create valid assumptions, right? Also, we host seminars on sources of funding, realistic valuation, process of finding capital. We also instruct on best practices of bootstrapping. So there's nothing wrong in using your own funds to grow your company, unless you're very confident about, going to the investor. We also have MOUs with several angel networks, VC funds. So we keep bringing, those experts also to the campus. We also insist on having an exit strategy. So as I said, that's a question I keep asking them all the time. How long do you want to keep doing it? What is your strategy, right? Also, we have, we do give them contacts of virtual CFO firms. But what we have our, in-house, we have our own corporate counsel and our IPR attorney. Because these are two areas where startups actually get stuck most of the time. one advice we give them all the time is how to manage their burn rate. So that's why, incubators are cheap places, highly subsidized than any co-working where they can come and work from. And also, helping them, as I said, with hiring and, looking at, expert retainers rather than having too much of their staff on the payroll. So because they need people who are self-motivated, they cannot keep managing the team, big teams all the time unless it's been structured well. So we also keep guiding them on managing their burn rate, because if your revenues are not coming as fast, then you're anyways going to fall into the value of death. Right. So this is the last slide for today, and after that, any questions, happy to take. So what is the rationale of selection? So for us, the stage of entrepreneur is very important. We look at incubation at two levels. One is I2P. I2P is idea to product, and P2N is product to market. So till now, we did not take too many startups in I2P, because we would mostly get startups in the product stage. They come with their ready products, right? And we help them with market access. But then, now we have some programs from government where we are getting startups from in idea stage as well. So we've created different level of programs. So, we start typically with design thinking, and then go on to, business model development. Now we'll work on, product development programs as well. So I2P, P2M is where you have to distinguish between the entrepreneur. Because even the level of experts will also differ at both the levels. And the third one we look at is an acceleration. An entrepreneur who is in an acceleration stage. So if they are scaling up, if they've already cracked their business model, they have early market traction, then we look at putting them in acceleration. We infuse seed funding, and we try and get them co-funding as well. So that's a model we've been developing now for last 2 years, co-investment models. So wherever we get VC funds who want to invest in our startups, we tell them that if you invest, we'll also invest. So increasing the quantum of funding for the startup. That's what we try and do.
Acha,
These are some. Yes.
yeah,
Please.
I just wanted to ask one or two questions. Like you are given different stages of the entrepreneur. Now the incubation period, from incubation to production, and then from production to the market. Normally, what is the time period taken? Supposing, for example, we are talking about an entrepreneur who is wanting to, say, manufacture solar panels. He is into the.
Yes.
You're able to hear me now?
Yes, I can.
So I was giving the example of a small entrepreneur who is setting up a solar manufacturing unit, and he intends to manufacture solar panels, and he is developing the product, and it is still in the incubation stage. Normally, when such an entrepreneur goes for funding, seed funding and things like that, how much time is normally given, or how much time is normally taken as reasonable from incubation to the product stage, and from the production stage to the level of marketing the product? First there will be something like, yeah, please go ahead.
Yeah. So, sir, as much as I understand, solar is now a commodity.
Can you speak a bit loudly?
Yes. Is this better?
Yeah.
So what I was telling you was that solar is a commodity as of now. So I would not recommend them to get incubated for solar unless they are doing any level of if it's unless there is an incremental innovation. So for example, we have a solar company housed here in incubation. They have come to us with a 2.5 crore funding from outside. They did not come to us for funding. They came to us here for space, for accessing our solar panels, and for recruiting student interns. So, their criteria of incubation was very different, but they came with funding. They already have a 2.5 crore funding from outside. So, you know, their time to hit market is, and they're not going to manufacture solar panels. So anybody who's doing manufacturing per se, the time to hit market is going to be longer, right? The kind of startups that I am talking about, their time to hit market is about 2 years, right? Because 2 to 3 years is the good time which even industry standards allow them to hit market. For somebody doing breakthrough innovation, so disruptive innovation, yes, their time in lab is going to be higher. That's what typically happens with biotech, right? So their time to go to market, I mean, biotech companies take almost 7 years to 10 years. So completely depending on the sector. But as I said, pure solar, if they have to just put a solar panel industry, we would not recommend them to come to incubation. That is not where they need incubation. People who require incubation are the ones who either require access to, mostly require access to the environmental factors which I showed you. So they either require, like I said, we are housed in an academic institution, they require interns from here. They require access to solar panels here, and they require access to heat space. But they don't require our funds as of now. They've already come with funding. So, sir, every entrepreneur who comes to us comes with a different, and that's why I think it takes so much time and effort in even nurturing a single entrepreneurship company. So we cannot categorize them as alike. Manufacturing is different than incubation. Uh, However, somebody putting up a if they come from that background, still I would say they can put it up in 2 years. So setting up a manufacturing unit doesn't take too much time.
I got
There
your
is-
point.
yeah.
Now going on to the next stage. From the incubation stage, then the product has to be tested. And after it is tested successfully, only then they can put it into the market. What would be an ideal period, ideal duration for such a process?
Right. So again, I would say depends on the sector. Because if it is a high-tech sector, it will take longer to test the product. If it is just an incremental innovation, then it will be relatively shorter. For IT companies, it is typically 6 months.
I think somebody is talking in between. The mics need to
Yes,
be
sir.
muted.
Muted, sir. Muted, sir.
Okay. Carry on, madam.
Yes. So I was telling you, sir, that depends on the sector, basically. Because some sectors, like we mostly have startups in the deep tech space. So deep tech R&D takes longer, but then they are able to come out in market with some minimum viable product quickly. So, takes about a year, 1.5 years for them to hit market. People doing, a lot of them even do, like I just mentioned to you about DE, which is a car cleaning platform. So that's one of our startups. We've seen, them grow 3x in last 1 year. So Gigi, when they came to us, they were already in market, but their revenues were not scaling up. They were not able to scale up their business model because it was very operations heavy, and they were not getting value for every penny they were investing in the venture. They were almost I would say they would have burnt out. So that would have happened, but now they are in a very comfortable space. They're they've already raised money from us. They're also raising the next round. They've tied up with most of the EV companies. So depends on the sector to sector. Mostly
Got it.
what we've seen, Hanji, mostly, sir, at our incubator, we get startups in P2M. So they already come with a product. Product may not be perfect. It may be a minimum viable product, but then that's what they perfect during the course of incubation.
Okay. Thank you, madam.
Yes. Thank you. So, and then, I have given a few weighted points how we assess entrepreneurs. So there is market acceptability, approximately 15%. Execution ability of the founders and the team, that's huge, 30%. Practicability of the business idea, 10%. Scalability potential, around 10%. Solution impact. So, how much is the impact they are creating? This could range between 5 to 10%. Market traction and results, right? 10%. Technology mode. So, have they created a competitive advantage for themselves? That's 20%. So, these are some of, and again, you can absolutely change it as you want, because while there is no I would say nobody gives these percentages as such. I just wanted to share it so that you understand how we assess at JSS Tech. So that's what we use here. But then to be very honest, there are 3-4 things which we always keep at as we call it, a back of the envelope. One is the commitment of the founders. Two is their business model. I mean, if they're going to burn a lot of money, maybe we'll not be able to support them. So, and we tell them that. Three is the competitive advantage, of course. 4 is impact. We do look at impact. I mean, how is technology going to make lives better? And 5, very important, is their market acceptability. So these are few, quick things that we always remember to look at when we start talking to them. And every time a startup comes to us, it takes us almost 3 hours to deep dive into, what they're doing, why they're doing, and we ask them all the ugly questions. So I think that time we never give our own opinion. We only ask questions. We ask a lot of questions. So that's how, we majorly look at entrepreneur selection. Any questions? Happy to take.
Thank you so much, ma'am, for the wonderful informative session. So, dear participant, please unmute yourself and ask your query if you have any. Neha Mathur, ma'am, do you have any query?
Good afternoon, ma'am.
Good afternoon, sir. Please tell me.
My name is Dr. Shailen Kumar Singh. I just want to know about you, suppose some incubation center provided a space and these kind of facilities for entrepreneurship. So
Right.
what they charge for that? They there are some percentage for equity or some some fees or like that. What are the model? Business model
Right.
for
So as I mentioned, we don't charge equity because we believe that their equity is very precious. We only charge equity when we invest in the startup. We charge fee. So we charge 5,000 rupees per month per seat. That's the kind of fee we charge. This is a Sector 62 Noida. So depending on your regional context, that's why I gave you a regional context. Depending on where you are housed, you can absolutely charge them. And that's why also maybe that's one of the reason why we get startups in a product stage, because now is the time when they already know they are wanting to invest in their business. So also we have another program called the hybrid incubation program. That's where we charge 45,000 for a year. So that's more experimental for them. They can come, be part of our sessions, engage with the team, engage with us. Try for seed funding. If seed funding happens, then they can convert to physical incubation. There are 2 models.
That's
Ma'am, I have a question. Can I ask that question?
Sure.
Yeah,
please go
I
ahead.
was not able to raise my hand, so I'm sorry if I'm skipping the line. I work for an MSME, and we are innovating a new product, which is for a very niche industry, which is nuclear medicine industry, where radioactive material are handled and radioactive material needs to be measured. So it is an innovative product, so far not produced in India. But the challenge we are facing is that one, we are an MSME, so of course we can't go in for that incubation specifically because we are not a startup. That is one thing. But why we need the funding is because we have to get the product tested. And the testing costs in the labs where we are approaching are very high. So my question is there any facility where we, being an MSME, we can get a discounted pricing or some schemes for the government, or how can an incubation center help us?
So, Stuti, currently MSME is running their MSME 3.0 hackathon for women co-founders, women entrepreneurs. It's a 15 lakh key funding. Just go on their website and apply. 10th August is the last date. Okay.
So good to know. Yeah.
Yeah. Unfortunately, I do not have too much understanding of MSME funds because I've mostly worked in the startup domain.
Okay.
So I'll not be able to guide you on that, but look up at MSME.
SIDBI, Small Industries Development Bank of India. Have you approached them, madam?
SIDBI, you can
Stuti,
check up.
madam?
SIDBI.
No, not yet, sir. Not yet, sir.
Please check with them.
Could you please repeat, or maybe you can put it on the chat? I'll copy it from there.
Yeah, it's SIDBI. It's SIDBI.
SIDBI. Oh, SIDBI. Okay, understood. And there's a MSME hackathon, ma'am, which you have mentioned.
You should apply for the MSME hackathon because it is for women entrepreneurs only. It requires an Udyam Aadhaar number and all of that. So I'm sure you have it. So just go ahead and apply. I would suggest you to apply. I mean, whatever you get is good. Also, I don't know. I'm sorry again. Pardon my not knowing this, but is there any benefit of staying in MSME? Otherwise, you could always try and be a startup as well. So so think about it. Also, look at Technology Development Board. So Technology Development Board also provides funding to MSMEs, startups, industries, everybody. Right? Look them up. TDB provides up to 50% funding on innovative technologies or adaptation of technologies. Look up TDB. Maybe you can get 50% fund from other sources and 50% from your own side, from TDB, for example. Also, look at Mudra loan. That also is something which comes, for MSMEs. Look at Mudra as well. Yeah, that is something which most of the banks give.
Sure. Thank you, ma'am. It has been, you kept saying, sorry, I'm not able to help you. But in that 10 seconds, you've actually shared a lot of information. And thank you, Sateesh, sir, also.
Welcome.
Okay. Any other query? So I think there is no query. So thank you so much, ma'am, for accepting our invitation and delivering such a wonderful, informative, as well as the interactive session. So we are very grateful to have you as a keynote speaker in this FDP, ma'am. Kindly accept the digital memento.
Right. Thank you. Thank you, Dr. Gaurav. Thank you, Galgotia, and pleasure being with all of you. Thank you so much.
Thank you. Thank you so much, ma'am. Okay, so dear participant, we are moving ahead for the next lecture. Mr. M.K. Sateesh sir has joined with us already. So he is an experienced industry professional, having spent over 40 years in the construction and manufacturing sectors. He worked as additional general manager, legal, credit control for Lloyd Insulation India Private Limited, first in Delhi and thereafter in Chennai, looking after legal and credit control operation for entire South India. Post his retirement, he has an eventful tenure with Jindal Aluminium Limited as head of the internal audit and legal compliance, heading as a team of 10 auditors, taking care of financial audits, tax audit, plant operation, audit, and beside auditing of group institution. He holds 3 master degree, MCOM, MBA in finance, MBL, master in business law from the National School Law School, Bangalore. Besides this qualification, he is also a qualified independent director from IICA Ministry of Corporate Affairs, Government of India. So we are grateful to have you as a keynote speaker, sir. Over to you, sir.
Yeah, your voice is slightly breaking. Are you able to hear me, Dr. Gaurav?
Yes, sir. Yes, sir.
Okay,
Perfect,
great.
sir.
Yeah, great. Now I will share the PPT and then start the lecture. You're able to see the PPTs? You're able
Not
to
yet,
see the
sir.
PPT? Not yet?
Not yet. Not yet, sir.
1 minute. Now?
No, sir.
You're able
Yes,
to
sir.
see now?
Yes, sir. Now it is visible.
Very good. Acha. Good afternoon, good morning to all the ladies and gentlemen, and especially the PhD scholars and doctors who are there. I especially thank Mr. Dr. Gaurav and the Vice Chancellor of Galgotias for giving me this wonderful opportunity to share my views on a very sensitive topic which normally people avoid in day-to-day world. The topic that I'm going to discuss today is on alternate dispute resolution mechanism for MSMEs. It's actually called as ADR for short. And basically, what we can do now is, first we need to understand what is an alternate dispute mechanism. First of all, I would like to talk about different types of ADR mechanism. You have 3 mechanisms that are available at present for MSMEs. Basically, out of these 3, the conciliation method and arbitration method is available for MSME units under the MSMED Act of 2006. The other mechanisms, mediation, is just very similar to conciliation, excepting that it is done through a court. So normally MSME units do not go to a court directly. They have a different mechanism, which I'll be explaining in the subsequent slides. Arbitration actually is a follow-up of conciliation if a conciliation mechanism fails. So I'll be dealing a little bit about arbitration also shortly. Now coming to the other mechanisms, ombudsman, tribunals, consumer disputes, redressal agencies, lok adalats, these are all mechanisms of ADR, but available to different sectors. Like for instance, if you take ombudsman, basically you would have seen when you go to a bank anywhere in the country, there'll be a big board wherein they would have mentioned banking ombudsman. They would have given the name and the mobile number where you can contact the ombudsman if you have a dispute with a bank. Similarly, there are tribunals, like you have industrial tribunals where there are disputes between the workers and the management and things like that are decided through a conciliatory mechanism there. Similarly, you have consumer disputes redressal agencies. Normally, consumer disputes, you have consumer courts in the country which address different types of consumer disputes. You would have seen in newspapers so many articles coming about how a person has been compensated for deficiency in service. Like, for instance, a railway refund has not happened after the due process has been followed. Now, if the passenger goes to a dispute mechanism forum, he will get an award, and the railways will have to shell out 3 or 4 times the amount for the mental torture the passenger might have suffered. Now, coming to conciliation mechanism, which is, you can say, the main mechanism available to all, you can say, MSME units. We will start off with the meaning, application, and scope. Then how a conciliator is appointed, what is the role of conciliator, and then how a conciliation gets terminated. Now, going into the definition of conciliation, basically, you can see from the slide, as the word conciliation suggests, conciliation is a means for settlement of a dispute outside the court of law. These words, settlement of a dispute outside the court of law, is very important to note, because in a conciliation mechanism, in a conciliation that is happening between two parties, there is no role for a court to intervene. As per the old Arbitration Act of 1940, there was absolutely no provision for conciliation. Subsequently, in the Arbitration Act of 1996, certain provisions were introduced, and section 65 to 81 of the Indian Arbitration and Conciliation Act apply to conciliation procedures. Now, as a conciliation is a process by which a third party persuades to the parties to the dispute to come to an equitable adjustment settlement of claims. Such a third party, you can say, is called a conciliator. Okay, so far it is clear, or a conciliation officer. Now we come to the next slide. What is the procedure for conciliation? Normally, what happens is the parties are at full liberty to adopt, evolve their own procedure or mechanism of procedure of conciliation for negotiating and arriving at settlement of their disputes. If the parties to the dispute, basically if they agree to conciliation, then they can appoint a conciliator and have their disputes resolved, settled through conciliation. Now, one very important thing to note here is the parties to the dispute can appoint a single conciliator or 2 conciliators, or there can be a mechanism where 3 conciliators are appointed. In such a scenario, what happens is, when 2 conciliators are being appointed, each of the party to the dispute, they will appoint their representative as a conciliator, and the third conciliator will act as a presiding conciliator in the disputes that need to be resolved. Now, when we talk of appointment, just now I dealt with this aspect. Section 64 of the Act, that is the Arbitration Act, deals with the appointment of conciliators. Now, the next slide, this talks about commencement of conciliation proceedings. Section 62 of the Arbitration Act deals with the commencement of conciliation. Now, what happens normally is, in a conciliation proceeding, the party which has basically initiated the conciliation proceeding, it is required to send an invitation to the other party to take recourse to conciliation and identify the subject matter of dispute. Okay. The conciliation proceedings are deemed to have commenced once the other party accepts in writing the invitation to conciliate. That means if party A has sent the invitation to party B, inviting it to take part in the conciliation proceedings, and party B responds favorably and says, okay, it's fine with conciliation.
Satish ji, Vivek here. Can I disturb you if you don't mind? Satish ji, Vivek here.
Yeah. Yeah.
Okay.
Tell me.
Can you put the screen on slideshow mode, because right now we are not able to read it. First of all, just on the bottom corner, you can
I
see
think Dr. Gaurav. Okay, okay, I'll put it on slideshow.
Yeah, please. That will be helpful. And secondly,
now you're able to view the slide properly.
Not yet, sir. Sir,
it went to slide number 1.
Sir, on the top, it is written from beginning or from current slide. You can click on it.
I'm not able to see that icon. 1 minute.
Sir, you can press shift plus F5.
F5. That is ideal. Satish ji, just press F5.
Okay. I got your point.
Alt F5.
Okay.
Yeah. Yes. No, it's still not.
So this is the first slide, sir, I think. Sir, again, it is.
Can you go to slideshow on the, on the top? Yeah, now I think it is. What's happening?
Yeah, you're able to see properly now, because on my screen, I'm not able to see that slide icon. It is showing there, but the slides are not moving.
So,
yes.
Sir, at the bottom, it is also shown just next to the boom bar. There is an icon. You can press it at the bottom.
Which one?
Just next to the zoom bar.
Zoom
Sir,
bar.
go on to tab. Yeah, you can click on from beginning also.
Okay.
Yeah, you can click on.
I think this slide is okay.
No, just on the first up.
Top of,
Satish ji, from slide number 1, you see on the top of slide number 1.
Yeah.
There is a from beginning, from current slide it is written. Can you click that?
It says from beginning.
Yeah,
right?
just click that. Just click that and then go to the slide where you were speaking. Yeah, now it will work. It is working now. Satish ji,
Yes,
thank
sir.
you.
Perfect, sir.
Okay. Now,
sir, you can navigate by the key. Yes, sir.
No, this slide is clear. Meaning of ADR.
Yes, sir. Yes,
it's now clear.
I will just speak on this. See, alternate dispute resolution mechanism is available to 2 or more entities when they get into disputes amongst themselves and are not able to resolve disputes. Now, this ADR mechanism is available in all the states of the country. Now, going to the next slide. I have explained briefly about this. You have 3 mechanisms available at present: conciliation, mediation, and arbitration. Besides these 3, you have something called ombudsman, tribunals, consumer dispute redressal agencies, lok adalats. Now, conciliation, if you see, basically, we are going to deal in a little bit more detail with conciliation mechanism, because under the MSMED Act of 2006, the conciliation mechanism has been given a lot of importance, and section what you call 65 to section 81 of the Arbitration Act apply to the conciliation mechanism. I'll be coming into those slides shortly. Now, the second mechanism, which is mediation, it is basically a process which is gone through by the court, where you have a mediator appointed by the court. Now, as far as MSMEs are concerned, mediation is not readily available. It is basically conciliation, and subsequently under the act, straight away they can go for arbitration. So I'll come into the details subsequently. Coming to ombudsman, basically my friend Vivek will be knowing, ombudsman is a term used for dispute settlement mechanism in the banking sector. All banks, they'll have an ombudsman appointed by their headquarters to deal with all the consumer disputes. Like for instance, there are wrong entries in the passbook given to the savings bank holder or the current bank holder. And if the savings bank holder is not happy with the statement given by the bank and he is not given a proper reply, he can go to the ombudsman and file a complaint. And the bank is duty bound to reply and give proper details. Now, coming to tribunals, you have different tribunals in the country, which basically facilitate dispute redressal. You have something like National Company Law Tribunal, which actually deals with the IBC code and company law matters. Then you have something like administration tribunal in different courts, I mean in different states, where they deal with administrative matters relating to the central government. And then you have something like this consumer disputes redressal agencies. Basically, consumer disputes are small courts which are there in all the states. And here also there are different levels depending on the value of the dispute. Every day we keep seeing in the newspaper, so many consumer disputes are getting settled. And the consumers, invariably, when they go with a complaint, they have every possibility of their complaint addressed, and they get good relief also. Now, coming to Lok Adalats, this is another dispute redressal mechanism, wherein the Lok Adalat is also set up through the court, and the courts, normally the high courts, appoint Lok Adalat, where you will have a retired judge and also probably a sitting judge at the level of a district judge, who will be sitting and trying to resolve disputes which are not got resolved over a long period of time. Now, coming to the next slide, we'll be dealing with conciliation mechanism. Here, I have briefly mentioned the meaning, application and scope, appointment of conciliators, role of conciliators, termination of conciliation proceedings. So we'll get into the details. See, if you see, conciliation is a means for settlement of a dispute outside the court of law. This is a very important point to note. When you say it is a settlement mechanism which is outside the purview of a court of law, that means the parties to the dispute have the freedom to go in for conciliation. Earlier in the Arbitration Act of 1940, there were no provisions for going for conciliation. Subsequently, in the 1996 Act, it brought about a lot of amendments, and section 65 to 81 of the Arbitration and Conciliation Act of 1996 deal with conciliation matters, and any conciliation proceeding has to get restricted to these provisions of the Act. They cannot go beyond these provisions. I'll be dealing with most of the major sections in the next few slides. Basically, when you see, conciliation is a process wherein you have a third party which facilitates the conciliation process, and it persuades the parties to the dispute to come to some sort of amicable and equitable settlement. Now, in such a situation, what happens is when the parties appoint a third party, that third party is called a conciliator or a conciliation officer. Now, talking about procedure for conciliation, the parties are at liberty to adopt, evolve their own procedure of conciliation for negotiating and arriving at settlement of their disputes. Now, if the parties to the dispute agree for conciliation, then they may appoint a conciliator and have the disputes resolved, settled through conciliation. See here, if you see, the parties have the liberty to appoint either one conciliator or more than one, maybe 2 or 3. It's not mandatory to have odd numbers for coming at a settlement, because basically even if you appoint 2 conciliators, both of them to have to come in agreement and then settle a dispute. Now, section 64 deals with the appointment of conciliators. Just now I spoke to you about appointment of 1 or 2 or 3 conciliators. Normally, if you see in most of the conciliation proceedings, there will be a single conciliator, unless the parties agree to have more than one person. Now, coming to the next slide, we talk about commencement of conciliation proceedings. Now, basically, conciliation proceedings fall under section 62 of the Arbitration Act. Now, what happens is the party which is actually initiating the conciliation proceedings, they are required to send an invitation to the other party to take recourse to conciliation, and also identify the subject matter of dispute. The conciliation proceedings, we can safely say, are deemed to have commenced once the other warring party or the disputing party accepts. Here it is very important, it accepts in writing the invitation to conciliation. The moment the second party accepts the invitation in writing, the conciliation proceedings are deemed to have commenced. Now, supposing if the other party rejects the invitation to conciliate, or the inviting party does not receive a reply, say within a period of 13 days, or such period as specified in their invitation for conciliation, it may be treated as rejection and the other party is informed accordingly. Am I clear, sir? Hello?
Yes, sir. Yes, sir.
Nobody is responding. Now, talking about the role of conciliator, the conciliator may at any stage of the conciliation proceedings make proposals for settlement of the dispute. Now, normally such settlements, such proposals need not necessarily be in writing and need not be accompanied by a settlement of the reasons thereof. They can make a proposal verbally. Now, under section 71 of the Act, each party on their own initiative or at the invitation of the conciliator submit to the conciliator suggestions for the settlement of the dispute. Now, what happens normally is the conciliator has the freedom and the option to meet the parties to the dispute individually and take their suggestions, or meet them jointly and take their suggestions. Okay. Now we come to the settlement agreement. Section 73 of the Arbitration Act deals with settlement agreement. Normally what happens is, when it appears to the conciliator that there exists some elements of a settlement which both the parties are ready to accept, then in such a situation, the conciliator shall formulate the terms of a possible settlement and submit them to the parties for their observations. After receiving the observations, the conciliator may reformulate the terms based on the feedback which he gets in the light of such observations. Now, the next step is, if the parties reach an agreement on a settlement of the dispute, they may draw up and sign a written settlement agreement. Both of them have to sign. And then the conciliator will assist, if so requested by the parties, in looking at the agreement, and if he feels certain changes can be made, he can make a suggestion. And then after the suggestions are finally accepted, the conciliator will also authenticate the settlement agreement and furnish a copy to each of the parties. Now, once such an agreement is arrived at, it becomes final and binding on the parties and persons claiming in under them respectively. So once we say in a conciliation proceeding, if both the parties have agreed to a settlement, it is final. They cannot take recourse to anything else, because it's a joint document signed by 3 parties and it is properly authenticated by the conciliator. Now, when we talk of status and effect of settlement agreement, there are 2 sections which deal with this. The settlement agreement shall have the same status and effect as if it is an arbitral award under the Arbitration Act on agreed terms on the substance of the dispute rendered by an arbitral tribunal under Section 30 of the Arbitration and Conciliation Act of 96 and subsequent amendments. Now, the next section, which is very important, it deals with confidentiality of all the matters relating to the conciliation proceedings, and the conciliator and the parties to the dispute, they have to maintain strict confidentiality when the conciliation proceedings are going on. And it also extends to the settlement agreement, excepting that where it is to be enforced and need to be implemented. In such a situation, you need to disclose. The next important aspect is, we talk of termination of conciliation proceedings. Section 76 deals with termination of conciliation proceedings. The conciliation proceedings will stand terminated under the following circumstances: by the signing of the settlement agreement by the parties on the date of agreement, or by a written declaration of the conciliator to the effect that conciliation efforts are no longer justified after due consultation with the parties on the date of declaration. That means you should understand that there are 2 aspects. One is they have come to an agreement. In such a situation, once this agreement is signed on the dotted lines by all the 3 parties, that is the parties to the dispute and the conciliator, the conciliation proceedings automatically get terminated. The second scenario is when there is a written declaration by the conciliator that the conciliation proceedings efforts are not bearing any fruit and they are no longer justified. After consulting with the parties, he can declare that the conciliation proceedings have failed and the proceedings automatically get terminated. Now, upon termination of the conciliation proceedings, we come to the cause. The conciliator shall fix the cost, which should be very reasonable, and give due notice thereof to the parties. And the cost shall be borne equally by both the parties. Of course, before they arrive upon the cost, they can discuss with the conciliator and probably talk about the cost and agree upon a particular, and then the costs are borne by both the parties. Now, I'm coming to the most important point in this presentation, which will be of interest to all MSME units. There is something called in the Act delayed payments to micro and small industries. Now, under Section 15 and 16 of the MSMED Act of 2006, you will see that the Act deals with delayed payments by a buyer to a MSME seller who has supplied goods and services depending on his nature of business. As per this Act, the buyer is supposed to make the payment within 45 days of accepting the supply or the services, or the day of the deemed acceptance of the goods and services. Supposing you dispatched material today and the material has reached the destination, say after 10 days. Now, Mr. Vivek is having a transaction in Bangalore. He's a MSME unit holder, supposing, and he is selling material to Dr. Gaurav in UP. Now, what will happen on the day the goods are actually received by Dr. Gaurav? He can say he has accepted the goods on the day he has received. So the 45 days period can be reckoned from the date of the acceptance of the goods at his premises. Now, what happens is, when a buyer fails to make a payment to the supplier as stipulated in above clause, the buyer is required, very important to note, he is required to pay compound interest to the supplier on the balance clear dues. Now, what happens is, a supplier might have been raising regular invoices and he may be getting payments. Now, what happens is, a dispute may arise due to some frivolous reasons, or there could be some genuine reason, whatever it is. If, supposing in a transaction where there are 10 invoices, 5 invoices have got cleared and 5 invoices have not been paid. So the buyer has to start paying interest, that is compound interest, on the remaining 5 invoices from the date of acceptance. The supplier will have the liberty to raise the interest debit note on the buyer and send it across for not getting the payment. Now, the most important thing here to note is, the compound interest is calculated with monthly res and is payable to the supplier at 3 times the rate of interest as notified by the Reserve Bank of India from time to time. Now, if you notice, gentlemen, all the interest rates have gone up. A couple of years back, if you see, the savings bank interest rate was just about 5%, or I'm sorry, 3%. And on fixed deposits, if you see, it was just 5.5%, 6% maximum. Now, if you notice, the rate of interest has gone up to 8.5% on fixed deposits, especially for senior citizens. So now what happens when interest rates have gone up to the customers? Similarly, the interest rates for borrowing also correspondingly have gone up. Now, I'm just giving an example. Now, supposing if the RBI rate of interest is 12% for commercial borrowing, now what happens is that 12% multiplied into 3 times. That means 36% is payable by the buyer on the principal amount due. The more he delays, this interest keeps on accumulating. And the most important thing is, whenever a supplier is raising an interest debit note, or he supplies he sends the notice to the buyer, it is better if he prepares an Excel sheet mentioning the amounts as the principal amount and then the percentage in terms of 36%. And this particular calculation, he needs to get it certified by a chartered accountant to authenticate his claim. And if he goes to the conciliator will definitely take cognizance of this statement. If he does not get the certification done by a chartered accountant, he may be asked by the conciliation agency to get it done. Normally, this is the practice followed. Now, the next important thing is, when is a reference made to Micro and Small Enterprises Facilitation Council? Now, here, all of you need to understand that under the MSMED Act of 2006, every state, every district, there is a Micro and Small Enterprises Facilitation Council, which actually acts as a conciliator and also can don the hat of an arbitrator. I'll be dealing with this shortly. Now, what happens is normally under the MSMED Act, a SME supplier of goods or an MSME supplier can approach the district Micro and Small Enterprises Facilitation Council and submit a letter. And the most important thing to notice for the supplier is he has to go to the Facilitation Council under which he has got himself registered, under which his jurisdiction falls. Now, what happens is here, the important thing to notice is wherever the buyer is situated in India, that is immaterial. What is important to note is where the supplier is situated. Suppose I'm a supplier supplying goods from Gujarat to a buyer in UP. Now, if I am, say, stationed in Vapi, Gujarat, there is a district enterprises facilitation council in Vapi. If it is a district headquarters, then obviously there will be a facilitation council. The supplier can approach the facilitation council and submit his letter that so-and-so buyer has defaulted. He can send the notice to the buyer under copy to the council and request the council to intervene. Then what happens is the council will send a notice to the buyer and ask them as to why they have delayed the payment, and they will ask for an explanation as to why they have delayed the payment. And they will also fix a date and inform the buyer to make themselves present once the commencement starts. That is, once the notice has gone, the conciliation proceedings commence. So, as enunciated in section 65 to 81, which I explained briefly in the previous slides, the facilitation council, they themselves can commence the proceedings, or they can seek the assistance of any institution or center providing alternate dispute resolution services for conducting the conciliation, and the above provisions of the Act, that is 65 to 81, will apply. Now, what happens in most of the cases is normally the facilitation council will not refer to any outside agency, because almost all the facilitation councils in our country are subsequently, sufficiently, I would say, well versed with the proceedings of the Act, and they literally can act like a regular court, and in almost all the facilitation councils, disputes under MSMED Act are settled. Now, what happens? The next stage is, if the conciliation fails, then the facilitation council can conduct arbitration proceedings, or like previously stated, it can refer to an institution providing ADR services for resolution of the disputes. Like you have agencies like Indian Institute of Arbitration and Mediation, or this is actually based out of Delhi, and they have centers all over the country, practically in all the states. Or you can go to Nani Palikiwala Center here in Chennai, or you can go to Bangalore Mediation Center in Bangalore. Like that, you have a lot of centers in every state. Now, what happens when I talk of failure in front of the facilitation council? It means the parties are not agreeing, and the conciliation has failed. Now, once Supposing we take a case where the conciliation proceedings have come to a final, you can say, settlement. Normally, once the party supplier goes to a facilitation council, the buyer has no option but to agree or try to go for a out of court settlement by trying to get the interest portion reduced, and then both the parties can go in front of the facilitation council and they can tell we are settled out of court. Council may ask what is the amount that you arrived at and settled at, and they may politely ask the seller, are you not interested in taking interest? It is left to the discretion of the seller. He can waive off the entire interest amount, accept the principal amount, or the buyer may agree instead of 36% interest. He may say, okay, I will pay you simple 6% interest or 8% interest for a period of time, which they mutually agree. Then they can go and submit a settlement agreement that we are settled. But at the same time, the conciliatory body, that is the facilitation council, will ask the buyer to deposit the amount in the court. That is, in front of the facilitation council, they have to show the DD amount or the check amount. Normally it will be DD because checks normally get bounced heavy amounts. So normally parties prefer demand drafts. So demand draft is to be shown to the council members and it can be handed over in their presence to the seller. And then the dispute gets settled. Now, what happens if the conciliation proceedings fail and one of the parties, say the buyer, goes to a court of law after the proceedings have failed? Normally, under the MSMED Act, no court in India can interfere with an award given by a facilitation council in a conciliation process. Like if the facilitation council has decided in favor of the supplier, which in most of the cases, 95% I would say, 95% of the cases, the supplier invariably wins the case. Now what happens if the buyer is not happy? He can go to the court, maybe he can go to the high court, but in the high court also, he will not be able to proceed with his petition unless he deposits 75% of the amount in terms of the decree or the award, as the case may be, or any order that has been passed by the lower court, that is a lower body, that is a facilitation council. Now what happens is, in such a situation, pending the disposal of the application for setting aside the decree, award or the order, the court has the discretion to direct such percentage of the amount deposited to be paid to the supplier as it feels is reasonable under the circumstances of the case, till the disposal of the application petition filed by the buyer. What happens is, normally the suppliers suffer a lot of cash flows, and when money gets held up with such buyers in huge amounts, say 50 lakhs, couple of crores, the court in its discretion may say, okay, you deposit 75% of 2 crores. So that comes to around 1.5 crores. In that 1.5 crores, the court may ask the supplier as to how much amount, or normally the court acts on its discretion and may, out of the deposited amount, give directives for release of 1 crore to the supplier so that he gets some sort of relief till the application is disposed of by the court. As far as the explanation is concerned, that's it. As far as the slides are concerned, I think I've dealt in a fair amount of detail. Coming to a very important case law which was decided recently in the month of May 2023. I will briefly explain the case before reading out the judgment. See, this is a case between Bata India Limited versus UP State Micro and Small Enterprises Facilitation Council, and the supplier here is AVS International Private Limited. In this case, I'll just briefly explain what happened. AVS International Private Limited was supplying shoes to Bata India Limited, was in turn exporting those shoes to certain companies outside the country. Now, what happened here was some of the consignments supplied by AVS got rejected. After Bata India had exported, they were returned by the consignee. After a period of time, what has happened is a lot of amount fell due, even for the consignments where the money was due and payable by Bata India to AVS. They failed to release the amount pending, giving reasons that the consignments got rejected, some consignments got rejected, and they were delaying on some pretext or the other. But the legitimate due amounts were not being released to AVS. So what AVS International did, they approached the District Facilitation Council in UP. And what happened? Subsequently, Bata India, they tried to go to Delhi High Court for setting aside the order of the Facilitation Council, and the Delhi High Court rejected the petition of Bata India. And then in the Allahabad High Court, the petitioner, that is Bata India, they filed a writ petition, because UP State Micro and Small Enterprise Facilitation Council is a government body, right? It is it's a body registered under the MSMED Act. Hence, Bata India chose to file a writ petition where one of the parties is a government body. And of course, obviously, AVS International as a supplier is also made a party to that. The Allahabad High Court, they, in their right wisdom, they dismissed the writ petition of the petitioner and held that UP State MSME had full jurisdiction to conduct the arbitration proceedings in UP itself, wherein the UP State Micro and Small Enterprise Facilitation Council decided to don the hat of an arbitrator. Under the MSMED Act, the Facilitation Council can itself act as an arbitration agency. They don't have to refer this matter to any institution or any outside agency, which Bata India was preferring, because they thought probably if they go to a agency outside UP, they can drag this party to Delhi and probably get a favorable judgment in their favor. But that did not happen, because that is just not possible. One was a question of jurisdiction. This is a case where the supplier is based out of UP. So Delhi has no jurisdiction to even look into this case, but they still looked into this case. Finally, Allahabad High Court ruled in favor of UP State MSC Facilitation Council and AVS International Private Limited. So what the idea of presenting this case is just to tell that under the MSMED Act, the local district facilitation council has a lot of powers, and especially the small enterprises, they don't have to spend money going to courts and running around, engaging advocates. In fact, in the facilitation council, they themselves can directly argue their case. It's not mandatory that you have to appoint an advocate. But yes, some of the small-time suppliers may not be knowing the law, so they will engage some advocates to fight out their case in front of the council. Acha, now one very important thing. I want to go back to the previous slide. Gaurav, can you help me?
Yes, sir. Yes, sir.
Previous slide.
Sir, just press the up arrow.
1 minute.
Up arrow, sir.
1 minute. I'm having some trouble looking at the different icons on the laptop.
Currently, sir, not visible. Your PPT is not visible.
Now, is the PPT visible now?
No, sir, not to me. Participant, please confirm. Okay.
Sir.
Is it visible now?
You can share again, sir.
No, sir.
No, sir, it is not visible.
It's not visible, huh?
Not visible.
Okay, okay, okay. No issues. I was actually wanting to explain the what's happening. I think the screen has exited. Just a minute, gentlemen. What were you telling, Dr. Gaurav?
Yes, sir.
What were you telling? I need to use the up arrow. Huh?
Yes, sir. Upper arrow.
No, that is where is it visible on the screen? I'm searching. Are you able to see?
The PPT.
No, sir.
No, sir.
Not yet.
No, not visible, sir.
Oh.
Sir, first you
1
should
minute.
click escape button. ESC button. First you should
Escape button, huh?
Yeah, on keyboard.
Lecture lage.
1 second.
On keyboard you should press escape.
Yeah, but then it is saying end of slideshow, click to exit.
Yeah,
so how do
Sir, upper arrow. Just press the upper arrow in the keyboard. Sir.
Achha, in the keyboard upper
in
arrow.
the keyboard,
Okay.
you just click the upper arrow.
Okay. One second, sir. Yeah.
Yes, sir.
Yes. Now this is a very important thing to know for the benefit of all the viewers. We need to know what is the distinction between conciliation and arbitration. See, conciliation proceedings, it flows from mere agreement. A party can request another party verbally that, "Arey bhai, let us go for conciliation to settle our disputes," and then he gets a written reply, and then it starts. Parties agree to conciliate after dispute takes place. Whereas in the case of an arbitration, arbitration flows from a prior agreement in writing by parties to the dispute. Now here, what happens between the two parties when they enter into a contract, there will be a separate clause. It talks about dispute resolution mechanism, or it will talk about what you say, law governing this contract, something like that. It can be either of the two. In that arbitration clause is actually treated as a separate contract in itself. it operates independent of the contract. So when such a clause is there in a big contract, where you have the terms of agreement, you have the specifications, you have the other details, commercial aspects, and then the payment terms and all this, there will be a separate clause on arbitration. I hope you understood. In a case of conciliation, the guy can simply ask the other person and he simply gives it in reply. I mean, he can give a reply telling, okay, we will go for conciliation, and the party A will ask the party B to just give it in writing that he is agreeable for a conciliation proceeding. Now, in the case of conciliation, a conciliator basically facilitates the parties to reach an amicable settlement. Whereas in the case of an arbitration, a tribunal may be constituted to settle future disputes. What happens is, in an arbitration, normally the tribunal could be consisting of one person or three arbitrators. It will always be in odd numbers, so that when an award is passed, the majority prevails. Okay. An arbitrator settles the dispute and makes an award which is binding on the parties to the dispute. Whereas in the case of conciliation, conciliation proceedings can be unilaterally terminated by a written declaration by one party to the other. And normally it is seen a conciliator helps the parties to reach an amicable settlement of their dispute. Now, in the case of arbitration, you cannot unilaterally terminate arbitration proceedings. Once the parties to the dispute have got the arbitration proceedings started, they just cannot terminate. They do not have the authority. Whereas in the case of conciliation, it can be unilaterally terminated by a written declaration by one party to the other. Now, one more very important distinction is conciliation proceedings cannot be used as evidence in any arbitral or judicial proceedings. Whereas, in the case of an arbitration, arbitral proceedings may be used as evidence in any judicial proceedings. Now, supposing what happens in an arbitration, an award is passed and the other party is not happy. Now, in a court of law, the party which is at the receiving end, that is, which has lost the arbitration, they can use whatever is available as evidence in the court where they are presenting their appeal against the award. I hope this distinction is clear. Dr. Gaurav?
Yes, sir, it's clear, sir.
And that's about it. Thank you, gentlemen. Any questions, please do ask. Don't hesitate. I'm ready to answer.
Thanks, sir, for very nice information.
Yes, if you have any query, please unmute yourself to ask.
Dr. Shweta, you have any query?
No, sir, it's clear for me.
Absolutely. Presentation is clear, no doubts.
Hello, sir.
Yes, sir, it's very informative. Thank you, sir.
Sir, my question is there, sir. Hello.
Yes, sir. Please, please.
Yes, sir. Conciliation is effective or arbitration, adjudication is effective?
Pardon me, just come again. Conciliation.
Conciliation is effective or adjudication is effective?
See, it's like this, sir. If the dispute is not major, in a conciliation proceedings, both the parties can easily resolve their disputes by mutual give and take. कुछ लेन देन की बात आ जाए, लेन देन का बात करके they can agree on a X amount. Supposing, I'll just give you an example. This is just a hypothetical example I'm giving. Now you have gone to the facilitation council and both the warring parties, that is the parties to the dispute, have one issue which they are not sorted out. It could be a very minor issue, deficiency of service. सपोजिंग अभी पार्टी ए ने पार्टी बी को कुछ मटेरियल सप्लाई किया. आई विल जस्ट गिव अ स्मॉल एग्जांपल. स्विचेस मैन्युफैक्चर कर रहे हैं, जो इलेक्ट्रिकल स्विचेस होती हैं, कंज्यूमर्स नॉर्मली जो यूज करते हैं, बल्क में वो सप्लाई कर रहा है. नाउ वन बैच ऑफ स्विचेस the buyer finds is defective, and for that particular consignment he is not paying the amount. Okay, now if that amount is huge, supposing 1 लाख है, 2 लाख है या 5 लाख रख लीजिए, for a small supplier जिसका टर्नओवर 40-50 लाख हो, 1-2 लाख रुपया भी ब्लॉक हो जाए, बहुत बड़ी बात है. So what they will do, they can go in front of the conciliatory officer and come to an amicable settlement. ठीक है जी, आपने अभी 1 लाख रुपया या 2 लाख रुपया होल्ड में रखा है, but you have accepted part of the consignment and only part of the consignment you are rejecting. Supposing 1 लाख में वो बोलता है ठीक है जी, 50,000 ठीक है, माल ठीक है, 50,000 खराब है, तो it's a mutual give and take. The supplier can say, okay, I'll take back the 50,000. You pay me the 50,000 for the balance. We close the dispute. The conciliation में ये फायदा है. Now, arbitration, people will go when it is not a case of one dispute. There could be any number of issues, clauses. I'll just give an example. Now, supposing an MSME unit, आप supposing यूपी में बिजनेस कर रहे हैं और आप नेबरिंग स्टेट में हरियाणा में किसी पार्टी के साथ से इट इज अ पब्लिक लिस्टेड कंपनी and you are an MSME unit registered under the MSMED Act in UP and the other party is in Haryana. They are dragging, आपको पैसा ही नहीं दे रहा, and they are simply giving frivolous excuses. ये ठीक नहीं है, वो ठीक नहीं है, verbally phone में बात कर रहे हैं, there is no written communication, they are dragging on. And if you have a dispute resolution clause in the form of arbitration in your contract, you can then invoke the arbitration clause. And what you can do, sir, as a MSME unit, you can drag that party from Haryana to UP. Supposing Ghaziabad एक district है, I'm just giving an example. So Ghaziabad district में आपका MSME registered है, गाजियाबाद में उसको आप ड्रैग कर सकते हो in front of the facilitation council and you can tell them to act as a arbitrator. और इसमें खर्चा पानी बहुत कम आता है, बहुत कम. When you go to a facilitation council, the expenses are virtually negligible. And वो dates भी जल्दी दे देते हैं अगर आप request करते हैं, because they have been basically kept under the act to help small suppliers to make business easy for them. Ease of business के लिए ही ये MSMED Act जो है गवर्नमेंट ने लागू किया है. And one very important thing I wanted to tell you, now supposing the other party is a listed public company or an unlisted public company, or even if it is a private limited company, doesn't matter. If they are dealing with a MSME unit, they are actually supposed to show in their balance sheet as a contingent liability कि इतना पैसा हमको ये MSME unit को देना है. They cannot escape their liability. And they cannot drag the MSME unit to their state by filing a case in the High Court. High Court will simply reject their application. They will say he is a small scale unit enterprise. So if he is objecting and telling jurisdiction, आपका कोई jurisdiction ही नहीं है, हरियाणा में आप आके फाइल कर रहे हो हमारे अगेंस्ट, ये कैसा मुमकिन है? क्योंकि I am registered in UP and UP Industries Facilitation Council, that is the district, जिस district में आप fall कर रहे हैं, that council has full jurisdiction to resolve any dispute. It can be either in the form of conciliation or it can be in the form of arbitration if conciliation fails. Arbitration तभी लोग जाते हैं when there will be more than 1 or 2 or 3 issues which need to be adjudicated. फिर क्या होता है arbitration process में क्या होता है? The arbitrator will then frame the issues which need to be which need to be settled upon. एंड इश्यूज जो है वो जब फ्रेम करते हैं, both the parties will be present in front of the arbitrator. Normally facilitation council में जाएंगे, there will be 3 people who will be acting as arbitrators or 1 person. It should be in odd numbers. अगर facilitation council में 4 आदमी बैठते हैं, then it is in contravention to the arbitration act. Actually they should not do that. कई दफा ये गलती करते हैं facilitation council वाले. Under the arbitration act it should be all in odd numbers, 1, 3 or 5. Either 1 member, 1 arbitrator or 3 arbitrators or 5. 5 तो होता नहीं है normally, it is 1 or 3, so that if there is a dissenting arbitration award, the majority prevails. I hope I am clear, sir. And arbitration can be expensive.
Thank you, sir. Thank you.
Arbitration can be expensive, and especially if you go to a institutional arbitration. Supposing facilitation council doesn't have the time to conduct arbitration proceedings, they may agree to the parties' request for a institution. Supposing UP में ये transaction हुआ है, UP में Allahabad में there will be an arbitration center. They can refer. Once you go to that center, they will have their own rules and regulations. वो बोलेंगे जी इतना पैसा जमा करो पहले. Single arbitrator, supposing आपका 1 crore का dispute है, they can decide the fees. They can say arbitration fees 10% अगर वो डालते हैं. I'm just giving an example. Not necessary it should be 10. It will be less than that also. 10% of 1 crore कितना हुआ? 10 लाख रुपया. ये तो रही arbitrator का fees. इसके अलावा चाय पानी का खर्चा होता है. आप हर हियरिंग में जाएंगे, 2 घंटा स्पेंड करेंगे, आपको फिर खाने का खर्चा उठाना पड़ता है. Then both the parties have to share all these expenses. So that's how it goes. I hope now I'm clear.
Yes, sir. Yes. Thank you, sir. Thank you.
Any other questions, Dr. Gaurav? Dr. Shailendra, any questions you have, sir?
Thank you so much, sir. Sateesh, sir, your lecture was very informative, and I hope it will be beneficial for all of the entrepreneurs who are going to start their journey. I have one doubt. I have one doubt regarding suppose for entrepreneurs, small entrepreneurs, there is a challenges. There are challenges like most of the entrepreneurs don't want to share their ideas with other companies or like that. So is there any law to protect their ideas, or how they can protect their business model or something? So
sir, an idea can never be protected under the IP law. Am I right, Dr. Gaurav? Under the IP laws? Abhi, there was a presentation last week on IP laws.
Yes, sir. Yes, sir.
You cannot get protection for an idea. You can get protection for a particular product which has not come into the public domain, and the process. You can go for IP for that. Idea is your idea. You should not
tomorrow only, sir. It is tomorrow only. Tomorrow we have session on IPR, patent, copyright, trademark, and industrial management.
I think your doubt will get cleared there, sir. Because see, I am not an IP expert. Basically, I have some knowledge, but I am not an IP expert. See, normally
they can sign a non-disclosure agreement kind of thing before.
Yeah, you can sign. That you can sign. But supposing the breach.
Yeah, they breach, but that in that case, law will.
The question will arise if the breach. But normally, non-disclosure agreement जब sign कर देते हैं, उसमें सारा clauses mention कर देते हैं, so protection also will come in that.
Yes, yes.
Protection for the supplier will also be included.
Yes, yes. So अगर किसी ने idea share भी करना है, तो they should go through non-disclosure agreement kind of thing.
No, but NDA alone will not be sufficient, sir. Non-disclosure agreement alone will not be sufficient. What happens is when a small supplier wants to protect his ideas, जब वो NDA sign करता है, non-disclosure agreement actually becomes part of your main contract. It's only an sort of an appendix to the contract. Contract में he can say that all his ideas are protected and not to be revealed to anybody, and he should not reveal. If he wants to keep his idea to himself, he should keep it confidential. Why he should share? Now that idea getting converted to a product, there should be a process and then the product. आइडिया को इम्प्लीमेंटेशन में लाएगा और वो खुद अपना पैसा लगाएगा पहले. Definitely it is not that he is going to share idea with every Tom, Dick and Harry. Now supposing he doesn't have money at all, but he has a good idea, then he has to necessarily share that idea with somebody who can provide some sort of seed capital to actually translate that idea into a proper process and then product.
Thank you so much, sir. Thank you so much, sir.
But more on this, I think you can raise this question with the IPR expert who is going to come tomorrow. I think
Yes,
Dr. Gaurav, I will also
Yes,
attend
sir.
that session. मेरे को भी थोड़ा
Yes,
सा
yes.
knowledge refresh हो जाएगा.
Yes.
IP loss.
You are welcome, sir. You are welcome, sir.
Any other questions? I'll be too happy to take them.
I think there is no query now, sir. So I would like to thank you once again, sir, for accepting. Yes.
Thank you very much, sir. It's my pleasure. I should thank you, Dr. Gaurav, for giving this beautiful opportunity. I'm sure more such opportunities you will give in the future.
Sateesh ji, thank you very much. Nice question and answer session as well. Wonderful job there. Thank you.
Thank you, Vivek. I hope
thank you,
some
Vivek,
of your
sir.
doubts got cleared.
Absolutely. Thank you, Gaurav ji. Thank you.
Yeah, thank you, sir. Thank you so much. So, Satish sir, kindly accept e-memento.
Thank you.
As a token
Thank
of
you very much.
appreciation and gratitude from the organizing committee
Yes,
of this FDP.
Yes, sir. 1 second.
Yes, sir. Satish sir, please accept it.
Yeah. Thank you very much for this wonderful gesture. And I am deeply indebted, Dr. Gaurav, for this honor. And it's a real privilege to have got associated with Galgotia University. And I'm looking forward to a visit, maybe sometime in September, October, if I come down to Delhi.
Sir, you are welcome, sir.
Thank you. Thank you very much, sir. Okay. Can we